now invite on stage Shri Brij Mohan, Executive Director, retired SIDBI, the former Executive Director of Small Industries Development Bank of India. Welcome, Shri Mohan. He was closely involved in kick-starting microfinance in India with the setting up of SIDBI Foundation for Microcredit, SFMC, as an apex financing and development microfinance entity in 1998. Earlier, he participated in setting up the Development Department in Industrial Development Bank of India during 1980 to 1990. Before joining IDBI, he was member of Indian Statistical Service and held the position of Deputy Director in the Planning Commission between 1976 and 1980. Warm welcome, sir. I'd like to invite on stage Shri R. Bhaskar Babu, Managing Director and CEO, Suryoday Small Finance Bank. So he's the Managing Director and Chief Executive Officer of Suryoday Small Finance Bank, which is a new age bank that transited from a microfinance institution and has served over 1 million customers as on date. With more than 25 years of experience in banking and financial services, he has worked in several organizations like Chola Mandalam, HDFC Bank, and G Capital in various leadership positions, handling diverse portfolios in products, quality, and operations. And he had co-founded Suryoday Microfinance in 2008, which has a loan portfolio of over rupees 1,700 crores and a deposit base of over 800 crores. I'd like to now invite on stage Shri Abhijit Maitra, President and National Head, ISB and MFIG Yes Bank. Warm welcome, Shri Maitra. Ladies and gentlemen, he heads the Inclusive and Social Banking and Microfinance Banking Groups for Furtherance of Financial Inclusion and Priority Sector Lending of Yes Bank. And he holds PGDRM from Institute of Rural Management, Anand, and postgraduate degree in Seed Science and Technology from Kolkata University. He has over 16 years of experience in various capacities in variety of sectors, such as the dairy sector, commercial banking, food and agribusiness, priority sector lending, and financial inclusion in India. So with that, ladies and gentlemen, that is our eminent set of panel. I'm now going to request Shri Malcolm Gomes to kindly take over the proceedings of this session. Let's welcome him with a round of applause yet again.
Good afternoon, everyone. First of all, a big thank you to SIDBI and Mr. Mustafa for having us collaborate on a topic as important as this. We feel privileged to be here, especially on a topic like this, where we hope to deliberate on the future of pure play MFIs in India. Also, warm welcome to my fellow panelists. As you can see, we've thought about constructing this panel for a topic like this quite carefully. There are a couple of microfinance representatives, that pure play MFIs, and there is a couple of neutral parties who've seen how the sector evolves. There's a MFI turned small finance bank, and then there is a more traditional bank. So I think for a post-lunch session, we're hoping to have we'll promise to drive an edgy discussion to keep you awake. Interestingly, in the previous session, there were many questions that came up that actually might get answered in this session, right? Because here we're going to talk about what happened. The entire set of 70-odd microfinance players are truly at crossroads right now. So several questions that came up about investing, about what's going to happen. We hope to maybe shed some light on some of those. Lastly, the last bit of backdrop for this session is, let's also recognize what this set of institutions has done for the country, right? It started from humble beginnings 25, 30 odd years ago. Right now, 80 million women have been served, whose lives have been changed. Few $1 billion of money has been disbursed to them, is kind of where the sector has come to. In the last 18-24 months, though, pure play MFIs have come down to 48-50% of the total MFI lending in the country. And therefore, the question comes, what's next? Right? So that's a little bit of the backdrop. We've achieved a lot, but what's next? So with that, just go through a brief presentation, maybe to, at least for the audience, to level set on where we are, and for the panel to lay out a few questions we should be debating. Yeah. Won't spend much time on the presentation, but the pace of the industry continues to be very rapid. NBFC MFIs, though, have been growing the fastest in this entire set. Like we said, today pure play NBMFIs are roughly 33-34% of the portfolio. This is based on, I believe, the latest MFIN data. But if you look at the last year or so, NBFC MFIs have really grown 2x than the banks. Now, of course, banks have come about to acquire these portfolios in various ways, either directly bought off, handed over, BC-based approaches in many ways. But pure play MFIs hold 33%. They've been growing quite fast. The entire industry, as we've seen in the plenary presentation, has been growing quite fast as well at 27-odd%. Just in the context of the, and I know I won't touch upon demonetization again, but that was an inflection point. I think in this session we don't intend to spend any time on that. That was an inflection point. I think the heartening thing for the industry is the fact that the growth rates are back. I know PAR has come down. New book PAR is probably sub 1.5%. Some of this is hangover from the previous effects. So I think the message is growth is back. From the previous slide as well, we saw its growth is faster than any other segment of the industry. So it seems like a very positive trajectory, right? That said, the reality is that things are shifting, right? The reality is the environment around pure play MFIs is shifting in 3 ways. Number one, the largest MFIs, the top 8 or 9 of them, have now been given small finance bank licenses. Almost all of them have launched and started operating. That obviously allows them to operate in a different way than they were. A lot of them continue to have a very significant MFI lending portfolio. A lot of them have made different strategic choices we'll talk about in terms of the MFI focus. Interestingly, traditional banks have also acquired MFIs. There are several examples. All of the biggest banks in the country have acquired, either are acquiring or will acquire or are partnering with MFIs, right? So the reality is, because this is a space that is attractive in terms of yields, in terms of the basic consumption premise, in terms of growth, everybody wants to participate, right, in some form or shape. Number two, at least we believe from some of the research, again you saw in the morning, I won't repeat it, but customer preferences are evolving, right? They are using things like WhatsApp and Truecaller. They are experiencing something different on a day-to-day basis in their personal lives. And therefore, their expectations of service, of how they interact with their financial institution is changing as well. Their needs are increasing. As we heard a comment saying, customers want 5 lakh loan, 2 lakh loan, 3 lakh loans. Not just for their businesses, but now for additional needs. Somebody wants to raise an additional room in their house. The woman of the family wants to construct an additional room. So the need sets are now broadening as well. And lastly, I think the ecosystem has changed dramatically. There are newer players coming in. Yes, they are now limited to urban cities, urban centers. There are players who are offering 7-day loans, payday loans, early advances against salary. At this point, I completely acknowledge that they are limited to a few places, but these are models that will expand over time. They will get into smaller towns, smaller cities. And like we've already spoken about, the infrastructure is changing to allow us to now do more things. So that's a little bit of the 3 big trends we see. Now, at least we believe all of these 3 trends has, and in the context of pure play MFIs, has some, what I would say, upsides for the MFIs, the pure play MFIs, and potentially has a few risks. So let's quickly walk through them. Number one, I think on the competitor scenario, the reality is the larger MFIs who have become SFBs might refocus. Some of them are refocusing already. Some of them may refocus in future. Some of them, by the way, have said, no, we're going to continue to stay focused. It's a mixed bag. If you look at the 7, 8, 10 entities who have done this, people are playing the game very differently. The reality is they are doing other things than MFI lending. How much, time will tell. Different people have said different things. The reality also is, like we said, that there is significant growth potential that's untapped. And if you are able to construct the right partnerships, you might be able to tap into that. The reality also is we are one of the few, this group of institutions, one of the few that has really the last mile customer reach and access and distribution that typically is in some sense very difficult for others to copy. So I think that's what this group, that's what's working for this group. I think the reality is there will also be risks. There will be a risk on yields and pricing pressures. I'm sure a lot of you are already feeling it. There is a risk of shift of perception of brand, right? As somebody becomes a bank, customer, as we heard in the morning, the perception of the word bank is very different in a customer's mind, right? So how a pure play MFI is going to compete against that? There are other things about regulations that you can get away from in terms of margin spread, caps, how much you can lend, who you can lend to, at what frequency. And I think the last part is, you know, if banks make a quick acquisition, they get access to a little bit of what MFIs have already built and constructed over time. So that's a little bit on the competitor side. Right? There are some things that are going to work for pure play MFIs. There are some risks. Very quickly moving forward, on the customer side, I think like we have already heard, a lot of new infrastructure coming in is building this digital pipeline. Needs have increased. I won't talk about it anymore, driven by higher income potential. The breadth of customer requirements are much larger. So if you're a pure MFI player, you own that customer today. That customer needs adjacent opportunities, adjacent products. How are we going to deal with it? That's an opportunity, but you have to think about how to deal with it. The reality also is that you know, there are now pockets that are in some sense hardened from this opportunity. There is in some sense, you know, we've talked about digital, but digital also is driving higher susceptibility to rumors. In fact, during the crisis time, a lot of these rumors were actually spread through WhatsApp and means like that, right? So in some sense, that's also affecting quite significantly it's also quite affecting, just one slide back, please. Yeah. And lastly, I think the customer expectations have gone up, right? In terms of response times, in terms of service and things like that. So that's a little bit of what's happening on the customer side that, again, relevant in the pure play MFI context. And finally, in terms of the ecosystem, like we've already spoken about, there are alternate forms of lending emerging. Completely agreed that these are limited today in scope and reach, but it's only a question of time before somebody partners with these people and takes it to interior areas, smaller urban centers. Cashless disbursements are obviously becoming a norm, but the reality is it's also leaving a data trail. So your customers, a pure play MFI customer, as you're creating a data trail, becomes a very good customer for another institution, right? So how are you going to prevent, how are you going to safeguard your customers against that? And the reality also is that newer players, because the bars on competition has now gone down, an ecosystem player, a telco, and I know there are talks of this going on in the industry, any other ecosystem player can now, who has reach and distribution in some sense, could be an FMCG, could be a telco, could ally with a financial institution and start competing with what you're doing, right? So that's how we see the ecosystem evolving. I think therefore from a pure play MFI perspective, right, we see three imperatives. And this is a little bit building to the debate we want to have. One, there is a need for reinvention of the business model on how do you get into smaller areas, how do you offer a wider bouquet of products and service to your customers, how do you safeguard the customers you've painfully acquired and nurtured over time, right? Two, there is a need to, in some sense, change your operating structure. Is there a different way, given regulations, for you to start thinking about raising funds to manage cost of funds, right? Are there different ways of managing risk? Are there different ways of customer servicing? And lastly, in terms of alliances and partnerships, the pure play MFIs hold the customer relationship. So how are we going to think about offering them other services? How do we think about moving from the woman to the household, right? From servicing the woman's need to the needs of the household. So I think those are the questions we'd like to debate on this panel. This is not by any means exhaustive. It is only a little bit of an indication of what we would like to cover. There are a few early thoughts that as a panel, we have gotten together and debated, but I think that's exactly what we would like to cover in the next hour or so before we open this up to you. So with that, I'd like to then proceed to the panel discussion. Thank you. So I think, as I said, we've got a well-constructed, diverse panel here. So we hope to have, varied views that, as an audience, we all find useful. So I think I'm going to start with a slightly broader question, and I'll maybe pose it to two different sets of groups. And Devesh, I'll start with you because you suggested the question in some ways. So, like we were saying, few years out, 2 years, 4 years, 5 years, what would be the role, just given what we all heard in the presentation, and I'm sure there are more things, right? There are, of course, challenges. New competitors have come in. It's becoming difficult to compete. We heard about liquidity, all of those, right? While, of course, there is the opportunity as well. That's quite significant. And I think we've only tapped a fraction of that opportunity. So 5 years out, what would you think is the role of standalone NBFC MFIs? Are they relevant? If yes, would their role change? So let me maybe start by asking you, and then I'll switch to colleagues in some sense who've made the transition to an SFB or a bank.
So this is a session just after lunch, so slightly dreamy session. So I was just joking with my friend on the other side, Bhaskar, and I think it should be, looking at the numbers, we should be talking about the sustainability of SFBs rather than NBFC MFIs, just on a lighter note. So I think 2-3 things I want to put out here. That one, looking at the fact that the sector has faced a tremendous challenge in form of demonetization just 2 years back. And today, your numbers show that microfinance, pure play MFIs, have reached 50,000 crore, 27% year-on-year growth. That's one. Let me just take you back. So I remember when Andhra happened, we were very small. So we had a portfolio of 11 crore. 1 year, I think, back before us, Bhaskar started. Govind has left, I think Govind and we, all of us. They were around 25-30 crore. We were 11 crore. Soham is there. A lot of people said there is, after regulations came in, after Malegaon committee report, so there is no future for MFIs now because there are caps and, there are 75% has to be qualifying and all those regulations. So, and people, even some of the esteemed people said, no, now microfinance companies can see the wall. We are sitting in 2018, talking about an industry which has reached 50,000 crore, pure play. So I think that's one. So coming back to what you are trying to say here is, I think what I see is that in the previous session, there was a presentation made, and the first line which I remember right, I think correctly, is that how do we reach from 1.5 lakh to 10 lakh crore? So are we saying that if we want to reach that number, it's only one legal form which can help us reach that? I don't think so. I think looking at the financial pyramid and the overall humongous challenge we have in front of us, I think there is a need for the many legal forms. However, what Dr. Alok Mishra was saying, that the regulations have to be enabling so that there is no arbitrage between the legal forms. Whosoever remains fit, lean, has the customer-centric approach, will remain. I'll just quickly take half a minute to talk about. I was recently going through a presentation about Costco. Many years back when Amazon came, people said most of the brick and mortar supermarkets closed down. But you see the latest number of Costco. They are the only company, they are going still strong. Amazon today makes the profits from their AWS, not from their, what they are doing on online. But Costco makes profit from their core business. So I think there is, and in that slide, in the presentation, I will be happy to share with some of the people if you want. There are great learnings for pure play NBFC MFI to stay relevant, true to the core, stay with the client. That's what my opening comments are.
Thank you. Maybe I'll toss it over to Mr. Bhaskar Babu. You have you were a pure play MFI. You've made the transition to an SFB. From where you are today, right? If you were to look forward or look back, what would your response to this be? Like, what would be the role of MFIs? Are they relevant? What role would they play going forward?
No, I'm in a bit of a spot. Having been an MFI.
We promised you that in this session.
Yeah, I would have said that, no, of course there is scope for pure play MFIs. I still do believe that there is scope for pure play MFIs on account of a couple of things. One, the way in which it is structured, as Srini also mentioned, the structure is all about effectiveness of cost of delivery. And that, I think, has been specialized by pure play MFIs. Keep it simple, do it simple, keep doing it better and faster. Today, what you're seeing is probably, maybe I'll be ruffling a few feathers, but today banks or SFBs are converted MFIs, so probably we are still in the transition phase. For the larger banks, it does not really make economic sense to be in micro-lending. Today, it's happening out of probably acquiring MFIs and keeping them as BCs. We discuss about the risks of customers revolting, coming back. But you're creating two separate HR organizations within an institution. One is the bankers, and one is people who are outsourced, but doing microfinance. And that would, at some point of time, lead to probably certain amount of pressures. And we have seen that in the past, even for public sector banks, that happening. And other one, which, as you put it as a plus, saying that we don't have any pricing cap and hence, but that's on regulation. But you heard the expectations from the Secretary of Financial Services, you generally hear the expectations. I don't think it is going to be too long when SFBs or the larger banks can operate at a price which is higher than what MFIs are allowed to operate. It's a temporary arbitrage because when the Malagam Committee came into existence, 95% of the business was dominated by MFIs. So, but if you really go through the entire working of Malagam Committee, at that point of time, MFIs are operating at a cost structure of 15%, 20%. If you ever told us that we can operate at 5% and 6%, we said it's simply impossible. But that has happened. So we said the 10% cap, all of us knew now how to operate at 5, 4, probably 3. Well, that's what is really happening. But for a bank to do operate at cost structure becomes extremely difficult. However, the Malagam Committee says that with doing all of that, pure play MFIs will earn an ROE of 15%. On the other side, now we are seeing ROEs going up to 20, 22, 23, 24. Even that's not going to be acceptable. So we are in a path where I think currently to judge by the regulations which is existing now, to say whether which one will play out, extremely difficult. But in the long term, if you want to play very proactively, irrespective of the current regulation, banks will have to operate a pricing which would make it very, very less attractive for us to operate, for the larger ones to operate directly into the segment. For SFBs, purely because from a concentration perspective, we would like to diversify the asset. And to that extent, apart from the risk mitigation, it also helps in terms of customer stickiness. But that path has not been really been that easy. It will take time. But if you ask me today, there is tremendous scope for pure play MFIs. However, if the assets are going to be continuously only unsecured because of the regulatory reasons, like a Demon event or before the Dandra event, if you combine the losses of both these events, it has taken out, in my view, I have not done a full calculation, all the profits ever made by MFIs. But post demonetization impact, equity and debt kept coming. So we didn't really see that impact that negatively, and hence you see a 3.5. But the 3.5, if you remove the new assets formed post-Jan, correct, it will be probably be, on that day's asset, it will be closer to 10%. 12,000 crores is what is lying as NPAs. It has to be absorbed by some of us. I don't know, everybody says that we have not been impacted, it's only 3%, only 2%, but somebody has lost 10%, that numbers will come out. So it's very complicated. I don't think it is as simple an answer, but there is place.
Yeah. No, thank you for that, Oscar. Tamal, if I could turn this over to you for the neutral perspective, right? What role would you think MFIs would play going forward?
I think it's more of a debate than a discussion, right?
It is.
One of the panelists, I would not...
Which is why we've also seated them on opposite sides.
I would not name the person. He asked me that which camp you belong to.
Yes.
Now,
you're in the middle.
My advantage is this: I am not a practitioner, so that like a cricket commentator, I can give some gyan.
Yes.
And you must take it with a pinch of salt. I have a slightly different opinion. I think it's, it all depends on what you mean by future Is it 5 years, 10 years, 15 years, 20 years? And also, what do you mean by, like, by being relevant, have millions or thousands of MFIs with 100 crore portfolio each, or you need to have 10, 20, 50 with 10,000, 20,000 crore portfolio. If you are looking for a future where you have 10, 20, 25 solid microfinance with 25,000, $4 billion book size, I think those days are over. And if you ask Bhaskar or any other SFBs, hand on heart, saying that are they happy by being SFB, they will say all yes. They all are looking for the opportunities to become a bank because they needed to de-risk themselves. They needed to de-risk themselves from the political issues. They needed to de-risk themselves from the liability issues. MFI, unlike in Bangladesh, in India, you don't have the ability, regulatory permission to borrow. So bank can always tighten the screw. Ask the MFIs now whether they will admit or not, but I personally know that some of the banks have stopped giving, at least sending the feelers that we will not give you money at this point of time. Even though MFIs asset size are far shorter end than the traditional NBFCs, but banks just, they go by the wave. So to summarize, from the demand side, yes, there's a huge untapped market. Thanks to my association with one particular large entity which is into microfinance. I travel a lot throughout India. So I see there's a huge, huge opportunity in terms of there. But are the MFIs capable of tapping this opportunity? Probably not, because they have this continuous risk every 2 or 3 years. How many times your investors will tolerate this? Today, demonetization. Tomorrow, loan waiver. Rahul Gandhi already said in Telangana, so it's irrespective of any political parties or administration, already said in Telangana how much loan you will waive. So the new elections will come. So it will keep on happening. Andhra may happen, Krishna Godavari may happen once in a while, after 5 years or 10 years, but the loan waivers and all others will continue to happen. So if you want to de-risk yourself, you need to become a bank. And on the other side, you are seeing that banks, because of this massive problem of bad loans, its June quarter number was 10 trillion plus, which is announced bad loans, not inclusive of restructured loans and others. Reserve Bank of India, the report says it will go around 12% by March 2015, gross bad loans. So banks are all getting into the retail loans. And they are given an opportunity, they want to go on their own. And why can't they go on their own? Because of the cost factor. My understanding is this time the industry-wide wage negotiation is happening. It will not be free for all. It will not be fully for all the employees. There are certain limitations there. Industry-wide wage will not be applicable to the entire banking staff. Does that mean that they can create a cadre exclusively to cater to the rural India? I'm not very sure. I don't think that can happen. RRB was created for that, but ultimately they went to the Supreme Court and they got the same parity of wages, which is why the entire RRB movement failed. Nothing happened. But banks are finding ways to reach out directly. HDFC Bank goes directly. And if the information is correct, this industry wage pact will not cover all employees. Some employees be out. I don't know how they will exploit to use this to meet the rural demand, etc., etc. But primarily the banking sector's focus now is on retail. So they can meet the demand. And they can always buy out certain MFIs. And again, you ask the MFIs, if they don't want to become a bank, they want to be a part of a bank, they want to be bought out. I'll not name anybody, because all the MFIs who are scaling up, one day thinking that I'll be bought over, I'll be wooed by some of the private banks and get taken over. So you can have the discussions and all. But I don't think there is a huge, bright future in this current scenario. It is there. Of course, if you create some unique proposition, which I would not like to name, I can think of 1 or 2 in India they have. The real community-based lending, but there you can't go for this meeting your investors happy and overdoing in certain geographies. You need to look for real new geographies, virgin territories. There, if you do this, so if you want to take the risk then there's a possibility that you do well. But I'm not very sure how many MFIs want to take the risk. They want to do in the same geography, and just like many foreign bankers, they come back from overseas assignments. Even after being sacked, they have some money, and they start housing finance business. NHB has given 55 licenses, if I'm not mistaken, last 3 years, from 40 odd to 99 or 98 licenses, and most of them are in trouble because of this. In MFI segment, you become a local banker, and then you get some equity because NBFC equity is very small, and then you start MFI, and then you, over a period of time, 50 crore, 100 crore, 70 crore, you build a book. No offense intended. I think they are very passionate. They are idealistic also. They are carried by idealism, but it has to be carried with a sense of making money also. So I'm not very sure, unless you scale up, you can really make money. Dr. Reddy once said that bleeding heart will not work alone. You need to have a very shrewd business sense as well. So if you have that, and if you go to the virgin territories with a unique model, which means taking a lot of risk, then probably you have some sense of doing well, otherwise not. But again, as I repeat, if you want hundreds of MFIs with 50 to 100 crore book size, there's a bright future. It will continue to be there.
Interesting. So maybe, Mr. Nambir, I'm going to put you on the spot here. Tamalan, thank you for bringing a little more edginess to this conversation.
I just wanted to provoke them. Don't take me seriously.
We like that, right? And Manoj may not be answering for yourself, but maybe for a set of MFIs, you know. I think Tamal laid out a few alternatives, right? His assertion is you can aspire to become a 15, 20,000 crore mega MFI. Maybe there are 7, 8 of them. Or you might have a few hundreds of 100, 500 to 1,000 crore MFIs. Or, as Tamal said, maybe everybody's game plan is to get acquired by a bank eventually. Where do you think you are, where do you think most of what I would say, at least the larger MFIs are headed?
No, I think the true spirit of having this session post-lunch, let me sort of try to, sort of wake people up and sort of give some really heartfelt thoughts. Right from 2010, I've been in the sector, and every conference, we actually write it off, right? So 2010, the AP crisis happened, and people said, well, it's all over, right? And again, something else happened after about 5, 6 years. Again, people said, it's the end. I think the whole beauty of life is that he's also right, he's also right. Right? So the beauty here is that if I were to give an example, it's about the educational system. Just because you've opened a postgraduate college or a PhD program, it doesn't mean that there is nobody else to come into the school. Right? It is a continuum. We have to understand that when you're talking about a sector which even today, based on various studies, people talk about 25, 30, 35% penetration. You're still talking about almost 45, 50, 60% under-penetration. Right? The dynamics of the business will change. So obviously in the urban center, there is enough demand now. The banks are there, small finance banks are there, people like NBFC, MFIs are there. Everybody has to change and evolve their business model. Right? So if we say that there is no market, I think it's fooling ourselves. So when we talk about either 25 or 50, depending on which report you go by, right, there is still a huge amount of market to be tapped. And for that market to be tapped, you need different kinds of entities. So I think the beauty of the system today is that you can start any entrepreneur, like he said, whether it's a sacked foreign banker or a young sort of management trainee who's basically out of school, who wants to start a business, can start with a Section 8 company. You can then evolve to being an NBFC. You can then hope to be an NBFC MFI. And if your entity does well, you can then aspire to be a small finance bank, and including a universal bank. So that sort of runway, tell me which other industry today has. Right? So if you're passionate about this business or this whole sort of area of financial inclusion, there is so much you can do. Right? BCs, small finance banks, NBFCs, NBFC MFIs, everybody has a role to play, including telcos, including payment banks. We need to understand where they all fit into the overall scheme of things. Right? And I think in the previous discussion, there was discussion about cost of delivery. Right? Please understand, today the lowest cost of microfinance credit right, is actually being offered by an NBFC MFI, not a small finance bank, you know, and not a universal bank. So what does that prove? It proves that NBFC MFIs essentially, like somebody else I think highlighted in the previous session, have perfected that low-cost delivery model, right? Our branches today are branches where the rentals are less than 10,000 rupees. And I've got colleagues on the same panel who've told me that when we've started to open bank branches, in terms of the minimum rent is about 1 lakh of rupees. The capex is, goes into lakhs of rupees, right? So one has to understand that there will be sort of rural geographies which need our kind of intervention. There'll be semi-urban geographies where all of us will coexist. And there'll be urban centers where probably over a period of time, people like us will move out and then you will have the banks. So to answer the other question, that I think it is inevitable, like he also mentioned, that over a period of time when you reach a scale of 5,000, 7,500, 10,000 crores, right, you probably will need to change your business model, right? And that is the right time of transition rather than sort of becoming an SFB at about 1,000 or 1,500 crores. Because the cost of conversion in terms of IT, the cost of conversion in terms of HR transformation is actually very high, right? So one needs that enough net worth, enough financial muscle to be able to make that change, right? So I think there's space for everybody. We should focus on the larger picture. How do we move that 25% penetration to a 50 and then a 75? Because financial inclusion at the end of the day is actually the national priority. So if we do not ensure that credit goes to the, to that level where it is required, right? One will have national unrest. It's as serious as that.
Got it. No, thank you, Mr. Nambiar. I think maybe I'll now turn to Mr. Brijmohan. You have obviously been very closely involved with the sector for several years. You've seen entirely evolve. I think I just want to pick up where Mr. Nambiar left. Everybody has their, in some sense, their place. You're small, you continue to stay. Maybe, as you say, as you get to 8, 10, 10,000 crores, maybe that's the time to think about something else. It might be becoming an SFB, it might be aligned with an SFB. So the question I have for you, Mr. Brijmohan, is, therefore, are we ever likely to see a 20,000 crore MFI? Or is there a natural point where the model doesn't make sense anymore?
Let me first start with your 20,000 crore MFI or 25,000 crore MFI. The issue is their ability to borrow that much from the banking sector. See, all said and done, these are annual disbursements. So if you are thinking of a book size of 20,000 rupees, you may have to borrow 50,000 rupees. Now 50,000 crore of borrowings from banks is something which I am not able to imagine. That's one thing. But I am on the other side of Tamal. To me, it looks, when the whole movement started, it started with the feeling banks will never serve low-income people. They will always need somebody else. So our initial thought was, we will create 50 Punjab National Banks for low-income people, who will focus only on low-income people. Even now that SFBs are there, banks are acquiring, even after banks acquire NBFC, slowly there is certain amount of, cultural union, and that pure thing of going to client every week or every fortnight, spending time with them, in that rustic environment, under a tree, is something which any type of a banker will avoid. So it is something where there would be collaboration in due course of time. But grassroots institutions serving low-income people through a system of regular client interface is something which is not going to die down in 5 years. To me, it looks that given the size of the market, there was a question in the last session that why it is only 200 districts, why not 700 districts? If I look back at the history, every time they were expanding and something or the other came. When this 26% rule came, that day I was sitting in Ujjivan's office. And Samit said, look, now we won't expand to rural areas. So such things keep on happening. But whatever name you want to give, they are going to stay because needs are very large, products are very limited, and they are building relationships, they are gaining confidence, all put together. Pure MFIs, maybe name changes to something else, but not banks, are fully, equipped to deal with the expansion, to deal with the new products, new processes. And so that way, pure play MFIs have life beyond 5 years. And maybe there is a day when banks start looking at MFIs not as part of their own thing, as a relationship. That, we will give you money, but you, just like BC relationship. So there relationships will come, but the cutoff point between microfinance and the banks is grassroots, 30 minutes of interaction on weekly or fortnightly basis is something which is ill-suited to banks. It has to be performed by a third party which has that sort of orientation. And when, even if they acquire, when we see, I used to work in IDBI. There, we were working on the NGO sector. So at the lunch table, people will say, I met Dhirubhai Ambani. And I won't have the capacity to say, I met an NGO. So within the banking sector, when that sort of a relationship is there, certain amount of shift, where slowly it takes. So even from SFB's point of view, my feeling is only few will stay focused on low-income clients. They will try to have the ambition of becoming a bank, and they will then try to have more and more products, more and more high-end clients. So to that extent, some space may be vacated by small finance banks, and that also will be occupied. So my one-line answer is that yes, there is a scope. Only thing is, structures will keep on evolving. Structures will find their own space, but the basic rule of hardcore contact-based banking on a regular basis is something which, instead of banks, such institutions like Pure Play MSME are better equipped.
Thank you. I'm going to, Abhijit, if you're okay, I think now is the right time to bring you in, right? This notion of banks occupying a certain function, complementing SFBs, and the assertion that you just heard, Mr. Brij, what's your view on that?
Good afternoon. And I thank Brij to actually take the BC part of it, because somewhere, to change slightly the context of it, the pure play NBFC MFI and the MFIs, there is a slightly fine line. So there are private companies, private NGOs, MFIs who are not NBFC MFIs are also in the same space as a BC of various banks. So that is where the partnership model has grown up over the years. So somewhere as a bank, we have also seen NBFC MFI growing on their own. Some started as a partner, but then they started on their own and did not wanted to partner. Maybe, there are slight operational difficulties, I understand that. But that is where we also believe there is a future to it. There are still a lot of NBFC MFIs who continue to be BC partners with banks and are also on their own. So, because the segment still, as the numbers also suggest, or the ground reality is that is a segment where a commercial bank can never reach. Even SFBs probably will not be able to reach to that extent. There are only 7 or 10 odd. So there would be NBFC MFIs or the MFIs. I will rather quote them as large MFIs as a one category, not just the NBFC MFIs. Because there are only some 10 odd which is 1,000 crore above. There are maximum are at a level of 100, 120, 130. Most of them are here as well, right? So because, as Tamalda said, there would be challenges in terms of the bank lines. How long can a bank keep on funding? So there would be some partnership which will keep on developing. It is already there. Now the co-origination model has also come in. There is a circular which has come from the regulator on the co-origination. There are a lot of deliberations are happening, but largely in the NBFC retail segment. I have not heard so far anybody talking on the co-origination except for a couple of them on the co-origination model. Because that is almost a model similar to a direct assignment model or a PTC model, but it's slightly more towards the BC angle, which keeps everybody afloat. keeps all the stakeholders happy, because as a bank, you need those granular assets as well. As an MFI, you need the similar kind of margins, if I may use that, and also the reach. So banks use those reach, get the granular asset, and NBFCs also have, the regulation is 20%, they have to keep the asset on them. So that's a kind of a model which has already been proposed. So I see that as a future going forward. Because regulator has already thought about it. So they have already put in that. So we as a banker also are part of those discussions. So hence I feel all these segments will remain. There would be an interplay between all these segments, and some such forms, formal forms will come up. Yeah, thank you.
No, thank you, Abhijit. I think from this discussion, at least till now, it's clear that there is space for everyone. It is clear that different people play with different strengths at different parts of the market, right? And therefore, it's also clear that pure play MFIs are operating in a certain space, are here to stay. So maybe let's just switch track in the discussion, and going back to the point you made, Manoj, saying, why don't we actually focus on how do we grow, get access faster, serve our customers faster. So maybe with that, I'll just switching the discussion, I'll restart with you, Devesh. So you have to really say, growth has been great. The last year, you saw the numbers 40, 50%. How do you, as an MFI now, sustain this growth, right? I know we talked about co-origination as one of the things, but what else from your perspective as an MFI you need to do to really sustain growth, grow 50-odd% year on year, let's say for the next few years? What would it take?
No, I also do not believe that 50% or 100% growth, there was a lot of untapped market which was there, but after a size like, if you see in our business plan, after 2020, we are not saying we are going to grow by 50%, we're going to grow by 30-35%, which is a very decent growth. So I think there are 3-4 things which I believe that we have to, Tamalda was saying that the days of 25 or 10,000 crore, 25,000 crore company is gone. But I think Bharat is, today I was looking at their number, SKS, they are touching around 16,000 crore. That's unfortunate that they have decided to, tie up with IndusInd Bank, but they are 16,000 crore. So I think that's another reality.
Srinivas is right.
So I think that means, and IndusInd Bank has decided to make sure that they remain separate, and tomorrow you may see that channel doing a business of 25,000 crore. So I think that's one. So I think 1, 2, 3, when it comes to what MFIs have to do, I agree with one thing that, after any sector which we evolves, there is some consolidation happen. There will be some very small number of people or companies which will have major 80-20 rule plays around in, still that's Pareto is, I think, still stays relevant. So today also if you see the top 10 companies in that pure play microfinance have more than, I think, 80% of portfolio. That will remain. I think 2-3 things which needs to be done. I think one, from the signals which we have got from the policymakers and regulator for the last 18-20 months is that they understand that there is a huge role for microfinance, NBFC, MFI, or NGO, or all these people. They stay relevant. They are going to play a huge role. So it's not, the shift is from a policy or from a regulation. The shift is not towards, banking. That's one. So, however, we in the previous session also talked about that there are some regulatory arbitrage which is there. Once you take out those arbitrage and you only create an enabling environment without worrying about the legal form, I think that will be a good ground for pure play MFIs to really grow and go to the next level. The second is what, I think I agree with what Tamal was saying, like we are a rural MFI, we are in now some of the poorest districts, around 120 poorest districts we work. We are in around 200 districts of India. And we have entered a lot of virgin territories. Let me just give you some number that recently we have 1.2 million, around 12 lakh customer. We did a scrub, and it was to our good surprise, it came to know that 32% of our clients were first-time borrowers. They've taken loan for the first time. This is in spite of the fact that people talk about, over leverage, people talk about, going after same clients. So I'm saying, so yes, MFIs have to take the risk, have to really go after territories which are underpenetrated. That's one. On the supply side, which is on the money side, I think I still remain hopeful. When 2010 we started, I think 2 million, 3 million, 5 million equity deals. Now, people are talking about 50 million, 80 million, 100 million deals will happen. So I think, and also on the debt side, I think what Tamal is saying that yes, the banking sector slightly has gone down, but I think if you look at the borrowing profile of some of the larger NBFC MFI, it's well diversified. Banks constitute around 20-25%, with PSUs definitely under the PCA. I think overall financial architecture will grow. India does not have a very good bond market. So there will be a bond market once, the way the government is thinking of. And if a good, well-run, governed, with a good credit quality and risk matrix, I think any lender will not differentiate about the legal form. So I think if these two, few basic things and still remain relevant in terms of what touch point Mr. Brijmohan was saying, that you remain that. So I think one of the fantastic things which microfinance companies has, that asset-light model and how they can really the touch base the client. I think if that remains, I think you can have you will see MFIs reaching that scale.
Okay. And maybe I'm going to invite Tamalla again into this conversation. So I think Mr. Devesh talked about 4-5 things that will be required for growth, right? But let's pick up on this regulation point because that has come up in several conversations. The Secretary at DFS invited this group to make suggestions as well. So from your viewpoint, and like I said, you're seeing all parties, right? You're seeing banks, you're seeing NBFCs, you're seeing MFIs. What kinds of regulatory interventions would be required to really help the sector, help MFIs, if I could say, from your viewpoint?
One clear gray area needs to be clarified immediately is this. If you know this, that two borrower exposure thing, which is applicable only to the MFIs. But now you have the SFBs in the same space. You could have banks also in the same space. So unless really your credit appraisal is very strong and the credit bureaus are working overtime, you end up getting, making your borrowers more leveraged and giving more money to them because there is a gray area and it is not to be, nobody can control it. Because if I am a borrower, if I am an MFI, I can't give money. I mean, not more than 2 MFIs can give money to one borrower, right? That's the thing, Yeah? Yes. And then if the SFBs also comes in the picture, if there are 2 SFBs and there is one commercial bank, suppose HDFC Bank is there and his bank is there and another SFB is there. So then instead of 2, you have 5 exposure. So where is the regulation there? Absolutely, there is no regulation. And these are the things that are happening in certain geographies. Not 5 I am exaggerating. Theoretically, I am saying. So that is one clear area where you need immediate RBI intervention. In fact, RBI is quite silent on that. It is to be that. Apart from that, I don't know because I think it's after the Maligram committee, it's pretty this your spread for the larger MFIs 10% spread. What else can you want? I mean, the only issue is on the liability side. I don't think even if you ask for it, which Mr. Vijay Mahajan used to ask from every forum whenever there is an RBI representative that allow us to take money in the form of deposits, which is a very firm decision from the Reserve Bank of point of view is this no. In fact, Reserve Bank of India, given a choice, I don't think they are very comfortable with this MFI structure at all. Even though they do not say it obvious, I mean in an obvious format, but the fact that small finance banks are being created is just to is just to say that, look, we are not very comfortable. Actually, you guys, those who are capable, you should become a small finance banks. And what Manoj said is this, he actually admitted that this is only an intermediate structure. Like it's, that's what I'm saying is no future. Because you are there for a few years, and then you have a choice. Either you become Bharat Financial, which he said, unfortunately, has been tied up. It is not unfortunate tied up. Bharat Finance wanted to become a bank. It could not become a bank, and the only option was being taken over. It is not tied up. It is taken over. It will, the employees will remain in the form of a internal BC, but the book will be merged with the, so it's not a thing. So this intermediation, that's you need to be do. I mean, the simple fact, if you leave the SFBs out, what is the total outstanding book of MFIs in India?
60,000 crores.
60,000 crores, not even 1% of the banking sector exposure. So if you are seeing such a huge opportunities there, then even in 2018, after 20 years, if we see 1997, the MFI started with basics and all, then why we have not even 1% of the banking system, tell me? If we have that. So I think like lazy bankers, MFIs are also lazy. As simple as that. You follow the same formula. You follow the, somebody told me that this, our hinterland is, I'll not name the person, is a very, very renowned MFI person in India. He said that our hinterland are so credit starved and we have such a regressive financial system. If I put 40 guys with 40 money bags on a truck and give him on some highways, and every 2 kilometers one guy gets dropped with a money bag, he can start an MFI there. Because there is so much of this thing. You don't have a credit risk there, it's an operational risk. It's operational. If you have, you are getting very upset with me, sir. I know that. But, but if you follow the system of connectivity, if you don't get carried away by technology and say technology can do everything, if you are an old timer, if you can think that technology is only enabler, but cannot replace human connectivity, and if you do that meeting once a week or once a fortnight, and picking this, this baby up from the crawling on the floor and put it on the lap, etc., you own mother all affection and love, and you become her. She will never become a defaulter. That's all.
Okay. I think we promised you entertainment, so I'm sure we'll give you something. I think it's very obvious, Manoj, you want to say something. So please.
Yeah, I mean, obviously Tamalda is famous for provoking, so how can I lose the opportunity? So I think, like we said, before the AP crisis happened, the sector was about 24,000 crores. Right? The AP crisis happened, it crashed to 14,000 crores. Today, as a total supply in the market between the JLG and the SSG, we are talking about 2 lakh crores. Right? So I think for somebody to say that there has been no growth happening from, let's say, 2010 or 12, after the aftermath of the AP crisis to today, is actually wrong. Both the crises have actually made us stronger. We've handled the demonetization crisis where I think in the last panel they were discussing this whole issue. 7.5% to 8% of the portfolio as of 31st of October 2016 has been written off and provided for. Right? And we are talking about 1,50,000 crores. So for this honorable exercise of demonetization, the bill has been paid by us. Right? People have to understand that. Right? And as and when we've gone to the regulator or to the other institutions, right, whether it's the DFIs or the other people to talk about it, they've all basically said that demonetization is a huge success, please don't talk about it. It is a success because we paid the bill for it. Right? Now, in spite of that, our investors, right, have sort of pumped in more money, done rights issues, right, and then ensured that the companies still sort of are going ahead. Right? So, I think your earlier question was basically what do individual companies need to do and the sector needs to do for the future. And
regulations, what would be your ask of
exactly. So I think he's actually touched a very, very important point, and it's not that we've not been discussing it in the SRO. It is very clear that entity-based regulation is actually now over. Right? If you're going to hold the sector by saying not more than 2 lenders and only have the NBFC MFIs being regulated, why the larger players in the room are actually the banks and basically the SFBs, right, is actually foolish. right? Which is the reason why, since the regulator was hesitant to actually take that step forward and dictate credit policy to entities, it is the two SROs, both MFIN and Sadhan, who have taken that lead in terms of trying to create a minimum acceptable code of conduct, which is the MSCC. And what is the MSCC? Essentially, we are saying that we are dealing with very, very politically sensitive clients, right? If we do not behave, if we do not come to that discussion ground and agree on a common minimum program, right? So you could have a whole host of things which are actually in the code of conduct, including no poach agreements, not lending to lesser delinquent clients, X, Y, and Z, right? But because of the business models of a lot of institutions, you might have a problem in agreeing on all of them. You're saying, let us at least agree on some 3 or 4 points which are very, very critical for the sector to be sort of growing in a prudent way. One, not more than 3 lenders to the sector amongst the RBI regulated entities. So NBFCs, NBFC MFIs, SFBs and banks, we are saying that forget about this 2, now we'll have 3, but not more than 3. Not more than 1 lakh rupees outstanding to the client, right? Not lending to a client who's actually an NPA, right? So the other fact in terms of what is needed for the sector to grow, the first thing is actually a good credit bureau system which penalizes people for not paying. And we cannot have rogue elements of people who would actually lend to people who are actually delinquent. If in the entire demonetization exercise itself, all the players who were in the sector had ensured that they were tight on credit discipline, trust me, the losses would have been 50%. But when a lady can actually get a loan in spite of being delinquent with us as a company, with somebody else, right, there is no motivation for her to actually be regular. Right? One, the 360-degree in terms of credit bureau report. We've always been discussing that. It's now a reality, right? So prudent, safe lenders essentially have to see what are the other loans that that lady has taken, whether from a bank, from an NBFC, from basically any other institution, so that you do not over-leverage. Right? So that is one. Second, so as I said, if the MSCC comes into play, and in fact we will need all the help of all the people in this room to ensure that the individual entities that you work with, you are associated with, you lend to, you are investors into, essentially are pushed into actually signing that. Because if you do not sign that, right, then it is possible 3 years down the line we'll have a huge crisis. Right? I think the whole ecosystem being created in the country today with Aadhaar, which is a different discussion, and I hope we actually sort of speak about that. The credit bureau system, the whole credit bureau sort of data being available, the payment system, right? These are all ecosystems being created which can ensure that the market will actually grow far more robustly tomorrow, right? But it will obviously need some amount of self-regulation from our side. If you're going to be attached to medieval regulation of not more than 2 NBFC MFIs, then I think we'll have a crisis very soon.
Okay. So maybe, Mr. Brijmohan, I'll turn to you. Again, you've seen the sector over time. I know, in addition to what Mr. Nambiar said, are there any other regulatory interventions we require to spur growth? And a second related question maybe, and since I'll come back to you itself, therefore, now, how do you see all these entities working together? Right? We talked about different entities. So if you could maybe cover both, because then I can pick on that. And
see, the issue of 2 lenders lost relevance long time back. And we had, from Sadhan side, we had met Dr. Raghuram Rajan for 2 hours just to plead that, can you not give advice to all the MFIs, all the banks, that Aadhaar is a must. He says, if I had a choice, I would have done it today evening. But then, these are all things which Supreme Court has to take a decision. See, in whatever form we can, this idea of number of institutions, rather than that, we need to bring how much amount somebody can absorb. I'm not talking of appraisal, because even simple things can tell what is the earning of this person, how much he can pay. So, irrespective of the number of institutions, it is a question of strong credit bureau, giving information, how much loan has already been taken. With that sort of a technology, then anybody is giving a new loan, that institution should be worried about their safety of funds rather than violating a rule or not violating a rule. So that's one observation which I want to make. Second is that somehow, we keep hearing somewhere in the morning also that the appropriate rates would be around 12, 13%, 14%. This is something which will again kill the whole thing. If we need a regulation, we don't need a regulation for putting a ceiling on interest rates. Interest rates were 40%. After all that amalgam, it came to 26. Now it must be around 20%. With the efficiency, with the technology role and everything, on their own they will come down. But anything superimposed without the rational, because 6 to 7% is the cost of delivery. So you cannot factor 6% into 12%. And then they are borrowing from other institutions at 13%, 14%. So, I mean, one quick thing is that in terms of regulation on interest cap is something which will really kill the sector. The other is, somewhere it is regulatory, it is education part. Somehow all the district authorities, some effort was done in terms of distributing the directories of microfinance institutions at the district level to the police people, so that there is certain amount of higher recognition which Mr. Rajiv Kumar was talking in the morning. See, in whatever form, a eligible institution doing this work should have full concurrence and support and regulatory backup. That is something which surprisingly, sector was going to RBI. I went 6 times, 10 years back, pleading for a law that we need a regulation. And Dr. Reddy telling, I will never allow a regulation because it is a good voluntary sector. You don't need regulation. But at the local level, treatment, respect, permissions, you need a strong backup in terms of a very clear role that, yes, these are institutions which have been eligible, made eligible, recognized, they are being monitored, their financials working, operations are being looked. That sort of a message, not only in terms of general information, but maybe we have a system of interacting with MPs, so that this whole thing is settled once for all. Regulation in some form which give higher legitimacy and respect for all these good operations is very important. Last point is something which can make all the difference. We have been thinking of making an impact report. For last 10 years we are trying that every year let us have a study on 10,000 clients in terms of what impact it has made. Even now that statement is valid. Supposing we are able to demonstrate the impact which you have already made, 90% of the problems which we are facing will not be there. You have done so much good work, but we have not sold that work to the market.
Okay. Thank you. Thank you, Mr. Brijmohan. I think I'll just keeping and bringing Mr. Bhaskar Babu, maybe you in. I think there was this notion that all these different entities can work together, right? There's a role for everyone. There's also opportunity to collaborate, maybe. How do you see that panning out? I'm also linking it to the fact that now these customers need different things, right? You are a pure play, or MFIs are maybe only able to offer a few of those. But customers need other things. They need maybe insurance, they need savings, all those kinds of things. So how do you see all these different people working together? I think all of us agreed that they will work together. But from your viewpoint, how will that work? What are those kind of partnerships that will work? I know we talked about co-origination, but what other things?
I don't think partnership is a choice. So people have to necessarily work with multiple people. As far as the end customer is concerned, the customer doesn't really ask you who is the originator of the product. They don't ask us for insurance. Are you selling it yourself, manufactured, or you're selling third party? Similarly, I don't think there is a choice for any financial institution to offer only selective products and stay that way. Partnership will be a way to go. Earlier, the partnerships didn't really work out at all because there was not real trust. But now I think the platform is pretty clear. Somebody owns a customer, somebody serves it, and all partnerships work only when there is a good amount of ethics and governance built into it. Nobody is playing the short turf. Just as a digression to talk about the future of MFIs, I don't think the question was not in terms of how many 20,000 crore MFIs would be there. So you can be solid MFI at 2,000 crore, you can go to 3,000 crores, go to 4,000 crores. To me, some of the factors apart from Mr. Vijmohan said, is that I don't think it's too much to do with only political intervention, only demonetization. They are all triggers. The underlying is a customer, indebtedness, our own practices, and our own casual approach to growth of 100%, as if 100% is given. I am 2,000 crores, I'm talking about 20,000 crores. At 2,000 crores, I'll have to really think about building a solid platform for 2,500 crores, 3,000 crores. It is absolutely operational risk intensive business. I've heard in the morning session saying that there is not much of a risk management required. Tremendous amount of risk management is required, including building your culture day in and day out, processes day in and day out. What kind of leverage can you have? MFI, by the virtue of being unsecured, can never be leveraged for 8 times or 9 times. It has to be only 3 times and 4 times. Or you can choose to be 8 times. In good times it works, in bad times it kills. Similarly, for even the large banks, today everybody is disclosing, saying that there's an exposure to HFCs, there's a disclosure to ILFS, 3-4 categories are there. So tomorrow it should not happen that they will have to disclose what is the exposure to this particular segment directly or indirectly. One other event like this, if it were to happen in 3 years' time, I think that the narratives would be very different. Today we're talking about saying that investors are supporting. Investors are supporting because they believe that they will still make money.
Yeah.
Else, otherwise, as the CDC gentleman asked, they will ask how long I'll keep investing only to lose money. So we are, I think, talking in a different kind of a platform. There will be a role for it. There will be a role for, I would put it this way, solid, good, pure play MFIs who know when to grow and how much to grow. If they think that 100% growth is a birthright, those organizations will go on for 3-4 years, but will get into amazingly difficult times, and that's what it is. So coming back to your partnership is a way to go, co-lending, co-origination. And equally important, I think, apart from all other things, is to really see the writing on the wall. The government, the regulator, all of them are talking about sub-20, sub-18. I think even before you're asked to do so, it's better to really get ready for that regime. If that were to be the case, how many of us will operate in which model? That, I think, the only model then would become partnership model.
Got it. Abhijit, maybe your view, as Mr. Bhaskar Babu was saying, sub-20, sub-18.
No, so just to add to that, so how do you reduce the lending rate is by cross-sell. That's the general theory all across the world. So in the micro space, so far, it's only micro lending. Microfinance is purely micro lending, that to JLG lending. But there is a space for micro banking if you look at it. So it is micro insurance, there is micro transactions, micro savings, micro investments as well. So that is where SFBs are working towards it. That is where all banks are working towards it. And that is where probably we are looking ahead towards that. So when I have already acquired a customer through a micro lending, the easiest way to get hooked to her or the household, total household, is to get into the other cross-sell products. Are they profitable? No, not yet. But given the technology, given the Aadhaar and the EKYC, these are all realities which we would have never thought of even discussing 1 year back. So that is where the partnership model will flourish. That is how we see, and that is how exactly how other banking partners have already taken a step forward. Micro banking with all these 4-5 items, obviously appropriateness would be required. You cannot do mutual fund to a rural lady. So those appropriateness will come in. There would be regulations towards that as well. So as we grow up, this is how it will grow up, and slowly that customer itself would be profitable. That's how any other banks, commercial banks work. Same this segment will also see. That's how we look at it.
Correct. Maybe the last round of questions before we open it to the audience, turning back to you, Devesh, on this notion of partnerships, everybody working together. How do you see that from an MFI viewpoint, right? I mean, Abhijit talked about, as a bank, they would be interested in doing savings with you, insurance with you, other things. How you only offer one product or 2 products today. So how will that work?
We are building this franchisee. We have now 500 branches in rural areas with this thing in mind, that because we have warm bodies on the ground, we have the connect, we have the clients. when the time arises and we see that our clients need those products, we will be, I think, the best place to really do partnerships. Technology and partnership will allow us to serve those clients. So coming back to, I think one point I want to really make here is that we have to really flip this whole debate from the client side. So I'll tell you, sorry, I'll just take you small. Recently, I was in Lucknow, near Lucknow. I spent 2 days and met, and only, I mean, they were not our clients, they were micro enterprises. 10 micro enterprises I met, I spent 2 days with them, around 3 to 4 hours with each micro enterprise. And let me tell you, it was very surprising for me that it was a main market, one of the main market in Chandranagar in Lucknow, 500 shops, not even 10% funding through banks. And you know who was funding them? A very small NGO. So 3-4 things came out very clearly. One, this client needs doorstep banking. You cannot expect a shopkeeper to really go to a bank, or if it is financial literacy or any service, it has to be doorstep. Second, we SFBs have a huge opportunity to really go and service those clients. All these people, there were various activities they were doing. Average margin, today morning also, and then Mr. Bijmohan was rightly saying that we are only talking about cost. We don't understand that. And we say, oh, how is it possible somebody can pay, 20% interest rate on a loan? But let me tell you, all the enterprises which I met, their average margin is from 25 to 30%. Looking at them, no bank will be able to service them, will not be able to give them loan, because when you look at them. So I think somewhere, and I asked them, and let me tell you that NGO was charging them 25% plus 1% processing fee. And I just went there as a whatever research person or whatever. I said that why don't you, if the bank comes, what is the differentiating factor? Why do they take from this company? They said service. So differentiating factor was the service. So if you flip this question from the client side, I think when I say that, which legal form will survive? No, I think we have to say that which legal form in its whole intensity will be able to really serve the client. Other than the deposit, which, still there is in some part, which is also, I'm very hopeful will also go over a period of time, that if you have to put deposits, so it has to be only bank. But let's talk about all other products. Every other product, client doesn't mind, yeah. Do you think for asset, client need? Some of the SFBs I've heard, they are putting asset centers. We were talking about, leveraging the distribution network to serve that client, but now you have a separate asset center. But yes, so there are today, like payment banks, there are some other innovations which are happening. So I think microfinance companies which choose, choose to, in future, to remain pure play. However, the evolution will be like this, that if they feel that the client has needs, they can definitely tie up with banks or SFB or a payment bank to really serve the client. I think our focus should be how do we serve the client rather than focusing on what is the legal form through which we serve. So there will be huge opportunities to partner, whenever the time arises.
Got it. Okay, I think I think we'll now open this up to the broader audience. You've got, I hope at least the discussion we had should now trigger more questions. So if we can have the mics going around, please. If you would also want a specific person to answer a question, please name that as well. Because there are, as you know, different people, different kinds of people on this panel.
So my thanks to the panelists for a very enriching discussion. And my question is to Tamalda. Tamalda, you suggested rightly a very provocative statement, but not conceptually. Many people talk about it, that you have to transform to a bank to de-risk yourself. So my question is, as a bank, you can de-risk your liability side. That's fine. that you don't need banks borrowings, you will have retail deposits and all that, though that also takes time. But moment you start de-risking your asset side, that means you are diluting your financial inclusion focus and going into secured assets, something what SFBs will have to do, and they are doing, like going in loan against property and gold loans and business loans and secured business loans. So, and I do not understand if you are a bank and you continue to have this microfinance focus, suppose 90% of your portfolio continues to be unsecured loans, even on liability side you have diversified and de-risked yourself, how does such black swan events de-risk yourself? And the second aspect of my question is about the loan waivers. I think loan waiver is a bit overplayed sort of a thing, because UP loan waiver was announced and this and that, but nothing happened because they are state level announcements. They affect mainly the cooperative banks, and the last national level waiver was ARDR in 1989, which affected all the banks also. Just because their portfolio is smaller in rural areas, they are less affected. So as a bank, and you continue to focus on microfinance segment and financial inclusion focused, you cannot de-risk your asset. That was my question.
No, my limited point is, when I say de-risk yourself, primarily from the liability side, that you are not depending on the banks. Of course, normally you are only depending on banks because your rating is not that good that you can borrow from the market. So that's what, so you are not depending on the banks. Second part, which Mr. Vijmohan says repeatedly, that you need to have a regulator. Otherwise, aapko koi mai baap kaun hai? So nobody is there. You are vulnerable. Anybody can take advantage of yours. Local MLA, local politicians, local panchayat. You can be branded as money lender. You can be XYZ. But the moment you have a Reserve Bank of India notification on in your branch that you are a Reserve Bank of India licensed bank, it gives you different stature. Definitely on the liability side. Even otherwise, it shields you from the other, right from antisocial element to politicians to so many other things and all. As far as assets are concerned, it is your choice. Like for instance, Bandhan continues to be 85% after 3 years, because, and if Bandhan is clever enough and smart enough, it should continue to be, because money is there. Where else do you get a 9% NIM? And globally, it is understood that if you are carrying money at the doorstep of people in the hinterland, money's cost will be more, which everybody says that. So I think we have that political literacy. Nobody will attack you, even if you charge 20%, 22%, as long as you don't charge 100% or 60%. So that is by choice on the asset side. But on the liability sides and other external environment de-risking, that's what I'm saying.
Other questions, please?
Just want to add here,
please.
My own practical experience. During DMO, let me tell you, we were in Narsinghpur, and the district magistrate there, I still remember Achla was with me, so we were discussing about, and you will not believe, I think coming back to what Professor Alok was saying, that let me tell you, when we talk about hinterland, it is about how do you your code of conduct, how do you behave with the client. Let me tell you, in Narsinghpur what happened. They said, the DM said, no, don't worry. I have filed FIR against Axis Bank and HDFC Bank. Because how their people have behaved. So again, the point is, when you talk about hinterland, I think it will be how you behave. What is your code of conduct? All this will come into play. Along with, yes, you are regulated. But I think only regulated but not code of conduct will not work.
No, I would really agree. I think there's this notion that NBFCs are the stepchild, right? And banks really are the legitimate child. It's not like that. Again, as I said, everybody has a role to play. It's all about how responsible you are and how you have the contact with the customer. Today, in this age of make and buy, there is nothing that a company with an established distribution channel cannot buy in case they cannot make. So you can make credit, you have the ability to raise capital, you have the ability to leverage that through PSL, by the way. So I think one of the most important things is that, which benefits the NBFC MFIs, is that the 40% hunger for PSL which is there will ensure that there is an enough credit line available so that you can focus on one aspect of your business, which is assets, right? Which is again, as I mentioned, once you reach a certain size, then it might be meaningful for you to actually transform. But there is meat in terms of being in a certain form, in a certain scale and size.
Okay.
I'm Mohan. I'm representing Mahashakti Foundation. Yeah, we got lots of information, lots of data, but again, it's hazy. We don't get a clear picture what should be the future of the MFIs. As Abhijit told, whether MFI should play the role of micro banking, should they provide like micro insurance and other services, micro savings, micro loan, or they should specific to micro credit only. And another thing, as per the discussion, I came to know there are many MFIs who are actually, their book size is 100 to 150 crores. What will be the future of these MFIs?
Anybody?
See, I firmly believe as long as you are having client at the center of your attention, you have a very bright future. Absolutely. Whether you are 100 crores, whether you are 50 crores, whether you are 200 crores. So this future of microfinance institutions, in whatever name we call them, as long as they are serving their clients well and clients are happy, then there is a question of having some additional help from government and regulators. But banks can never replace you. Banks can only collaborate with you.
I'm Kalyan from a not-for-profit MFI, Kalanjam Development Financial Services. Let me really congratulate Tamil for not mincing the words, putting the right kind of perspective as I see, because it vibes with me what I'm seeing actually. We don't want too big to fail MFIs in this country, like we see what's happening recently, what we have seen. Having said that, I think the way forward, the MFIs, the risk should be spread and it should not be concentrated on a particular MFI. It should be small is beautiful. In this microfinance, we need so many MFIs at the district level or at the state level. And small players need. I don't think we should talk about a big kind of an MFI. I think that's the way forward in future. To that extent, I think what Kamal made is a very practical comment. Then what is disappointing in all these MFI conferences is the other side nobody is seeing. The price that I pay as a client, is it sustainable for me to come out of the poverty or, I mean, even run the business? How can I pay 30 or even, I think this 26% is again a myth. I know many MFIs are charging disguised, there are pricing is also happening. There are many other charges. So then what's happening to the clients in terms of sustainability of client? What's happening to him? I think nobody talks about that in such kind of a Congress. It's very disappointing. And is there any study, I think maybe McKinsey, I don't know whether you attempted, what happened to these clients of MFIs, how many of them really running the business successfully, and how they are graduating? I think that's where the SIDBI should now invest, at least now having taken this role, lead role in this country. What is happening to these clients over a period of time, and let's see how it's really impacted. And we talk about that is one. The other issue is about, of course, very sensitive, but this again a different take. My good friend Mr. Bridge is also there. We always clash words on that. The pricing, have you given a thought why there is only one regulation now in terms of pricing? That's with regard to these MFIs. There is no other regulation in this country in terms of the interest rates. That's the only thing. Why that has come in the first place? We talk about so much about the credit discipline of the borrowers. How disciplined we are. Have you given a thought to that? I think that we need to look our inwards and then ask these questions and answer that. And that's where the Tamil brought a sobering balance to this debate. I think that's where we need to look at that and then ask these things. Why this? Can we tolerate a pricing of 40 because I am looking at a doorstep? I'm just for argument, even for that. There may be a debate on that. 40% would be okay, this is fine because that's my costing. That's where I think I was really pleasantly surprised in the morning. Mustafa was saying that. How to make it, see, the debate was on always access. Still there is a debate is going on. how the access with affordability, I think that affordability, then how affordable is again different takes will be there. So when you throw a challenge at 12%, I think it's going too far in a commercial or practical sense. But then he has thrown a challenge how to make it affordable. I think there must be a session on driving up the efficiency and driving down the cost. That is missing here. We must have a kind of a debate on that. On that note, I conclude. Thank you.
Sir,
I just want to, one thing. You know, there is a study done by IIM Ahmedabad, and if I'm not mistaken, Professor Samar Guha.
For Bandhan,
Huh?
for Bandhan client.
Bandhan client. Okay, sorry. So this is Bandhan. 2013, I think, and that it's available in public domain, and which talks about despite charging high, those days would be 23, 24% probably. Now it is much, much less. Still, the segment where the MFIs lend, their IRR justifies that. In the sense, when you are giving money to a fish seller or vegetable vendor or rickshaw pullers and all, on the investment of capital, they earn so much, they can afford to pay this. That's what you can take a look at it.
No, I think it's a simple equation. You give 100 rupees to somebody who's selling fish in the morning. He sells it at 110. He's made 10% return for the day. 365 days, he's making 3,650%. Against that, if somebody is charging 20% and if he has access to finance, that is more important. The other option is 100%. So we are all comparing all the time to this so-called imaginary 12% or 13% that we believe that he should get. But the cost of delivery, again, if you have a 10,000 rupee loan, which is across 12 months, right, and you spend 500 rupees on collecting over a period of 12 months, it's 10% average.
And
so I think this is actually beating, yeah, exactly.
It is non-collateralized. How much you pay on your credit card?
No, that is different.
No, same non-collateralized, sir, in that sense.
Yeah, no, but what I am saying is, for the quick loans, these are very quick loans, very fast rate. 3 times, 4 times a year. Second thing is, raw material, labor is so much in terms of the cost of production that by charging 24% and by charging 12%, the difference in the pricing will be only 1 paisa in a rupee. If something can sell for 99 paisa, it can as well sell for 100 paisa. See, when the loan sizes are large and tenure is very long, interest rate makes a lot of difference. Correct. But when the loan sizes are small, tenures are small, and they are put to effective use, this is not at all an issue.
I think the whole misunderstanding is started when all of us were forced by the regulator to actually quote reducing balance rates. Right? Because to the illiterate or the layman outside, including our politicians, when somebody says 24%, says, oh my goodness, that is too much. But if you say 12% flat, he says, oh, okay, that's good. Right? It's a question as to on what basis are you actually communicating. Access to finance there is more important than the cost.
And cost.
Having said that, I'm not advocating that the price should be high. I'm not saying that at all. So as I mentioned to you today, the scenario is it's an NBFC MFI, which is the lowest in the country today at 19.25%. Everybody else, including banks, SFBs, other NBFC MFIs are higher than that.
Which MFI is this?
Swatantra.
Yes, sir. But this point about efficiency, Devesh, I don't know if you want to comment on. Is there further scope for efficiency?
You know, one, you mentioned your first comment was that there are some MFIs who are camouflaging and charging more. I don't think, I'm on the board of MFIN. I can tell you with full assurance that the NBFC MFI, which are member of MFIN, I don't think there is a single company which is camouflaging anything. It's very clear. There are 3 things which is being charged, which is rate of interest, processing fee, and the administrative, the insurance fees, which is actual. So there is nothing else which is being charged. Coming back to efficiency, look, if 2000, let me tell you, in 2010, 9-10, when we were starting our company, the average rate of interest was 36 to 40%. I know it is a mix of regulation and efficiency. We are now talking about 21%, 22%. Let me give you an example of my own company. It is because of DMON, which got delayed. But before DMON, we were already talking about that, how can we bring it to less than 20%? irrespective of the fact that, we may not enjoy the 10% NIM. So there is a overall, everybody is sensitive on this aspect of bringing the rate to lower the rate to the client. However, there's another thing which Tamalda and Manoj said, that it does not make a difference to the client, 200, 300 basis point. Coming back to the fact that, when we are talking about in future, look, how can we reduce the rate of interest? I think one thing which is not being talked about is that Manoj was saying that 40%, this is all PSL lending. But are the MFIs getting the rate as per the PSL? No. So why don't we talk about supply side? Why don't we talk about that the banks today, I'm sorry, there are larger banks, which I know 1 or 2 banks where the cost of fund be 4.5. Why can't they build 2% in, whatever their margin on it and 6%, give it to the microfinance companies. Microfinance companies will be still able to do it 16%.
I think Mudra is doing
so
it.
It's a combination, sorry, I'll just complete. It's a combination of both. Microfinance companies have to bring efficiency. On the other side, the supply side, has to also come down so that, you can actually give that, value proposition to the client.
We all know that we wanted to see this. I said, in fact, the debate started with the development finance, microfinance and development finance. So why don't we discuss about debate on the blended finance as the stakeholders, all stakeholders together? Why do we look at only one narrow point? See, in any way there is a pure play, as Tamal said, as long as there is a demand, there will be always scope for some players. Whether big or small, the market will decide. But the problem is, why don't we looking at the other options of the blended finance, the option, basically it is a development finance. I think that debate is not happening. And what is that kind of recommendation we give to the government and the regulator or even the investors? I think that is very important. The blended finance debate I have not seen in this country, but other countries are talking. We are also running a network. We are connected to the other markets. Even the Bangladesh there is a huge debate, and then, in fact, there is a fall from grace. What happened? The kind of pricing that happened, that shouldn't happen, because the sector should survive. And you can't rule out a black swan coming up, either AP crisis or some other crisis is going to come back. Black swans are not infrequent, maybe not frequent, but not infrequent. So let us be prepared for that, but then let us discipline ourselves and start a debate on what is that we want if we want to make the client sustainable. That's very important.
Sure. So I think we'll also talk about that after the break. But any other questions? Any other questions from the audience? Maybe 2. We have time only for 2. So.
Namaskar, sir. Myself Govindas from Gramothan NGO, now a Gramothan NBFC from Odisha. And after 15 years of the implementation of the microfinance program, now I confuse, I think. So why I confuse? The data of the total borrowing, total assets, total liability, it is right or wrong? If it is right, where money goes? So, in India or out of India? If people are not able to get, there is no change, no development, because all are running after portfolio, profit, recovery, lending. So we forget about the ground reality of the microfinance. In the name of digitalization, we are creating another gap, or not. All are running after to small 100, then 1,000, then 50,000, then bank. So where we are going? If you will ask about microfinance future, coming in at the ground, dark or in bright? So it should be discussed, and it should be my confusion personally. Thank you, sir.
What is your size? What is your loan book size?
My size is very 100, sir.
Huh? Sorry?
100.
100.
Yes.
After 15 years.
After 15 years.
So that you have the answer, no?
Sir?
You have the answer. You
Sir,
are.
I am not talking, sir, 100 or 1,000. I am talking about forgetting development sites, sir.
No, sir.
Because we are giving, if you see one survey we have done in 5 villages and 7 customers. So they are managing, people are managing good way their fund flow. But their book size now is more than 2 lakhs. There is no police missing, sir. You have uploaded in Highmark or CIBIL data, but somebody is not uploading. If you see the 7 borrowers lended one customer, but you are feeling what 3 borrowers will give, 3 lenders will give the loan. This is the ground reality. So if policy is clear, so why you are not addressing that, sir? So I am asking, so that they are managing fund flow very properly. They have liquidity, or we have no liquidity. This is the thing, sir. If you see, this microfinance sector is required SAG to Sarkar. And when we started, sir, Bijman Sahab, here you were sitting, we have started FFI, Friendly Finance Institution. Now we are working on MFI. So then MFI is trying to take a FI. So FFI already chala gaya. So microfinance abhi digital mein paisa bhej do. And second one question in my mind, if the saving status of the India very lesser than the loan status. Okay. Why, sir? Where is money going? So if you give 1 lakh loan, I will take 80,000 savings. Loan size is 100, savings is 80,000. So this is happening in the rural area. And everybody focusing only on urban sector, not going rural, remote rural. So why I am saying, sir, data is very confusion. BC bankers are claiming I have given 20,000. Same money coming to my pocket, I am claiming I am already given 100 crores. All total will come, this is 10,000, 20,000. This figure is very big.
Let me add a line in supporting Govindji. We work very closely with him. He runs a very fine institution in Odisha called Gramuthan, and even during demonetization, let me tell you that none of his clients even delayed their payment by even a single day. 100% payment, right? That's the kind of record that he has. And I think if I can sort of summarize what his grief is a good organization like that, how does it raise capital, right? And I think that's where people like SIDBI, people like the HNI offices today can essentially help, because earlier there was this whole issue about Indian and foreign money, which made it even more complicated for people to raise money. And I think once they raise capital, I'm sure they'll be able to raise debt with the PSL and the other benefits. So I think this is all the pain of a smaller organization, which is so good that they're wondering why money doesn't come to them and why they're not able to grow. So we actually have a partnership model with them with almost 35-40 crores of outstanding. And let me tell you, our experience has been absolutely wonderful. And if a lot of the other medium and bigger sized MFIs can actually work with sort of partners like that, they would have the client connect, which is so strong, and people who have liquidity like us can essentially help them actually grow their business. Thank you.
There's a question.
I have a question to Bhaskar and then a second question to the panel. The first question to Bhaskar is on his own transition from an MFI to a SFB. You were an MFI with pretty much focused product. On the lending side, you had costs pretty much managed. The transition to SFB would have involved a lot of increase in the cost, both on technology, compliance, liability will take some time. And on the other side, you'll have to also invest substantially in building the non-micro asset product. So what do you think will be the critical, you don't have to give the exact numbers for Suryodaya, but in your view, if you have to give an advice to a typical MFI converting, what do you think should be a size and the time frame by which one would start looking at the benefits of conversion from a MFI to a bank? That's one. Second is, this is a question to the panel in general, is the recent judgment by the Supreme Court on Aadhaar and the implications in terms of the cost that the sector will have to bear, and how does one go about it from an industry perspective?
I think just on question 2, in the interest of time, there is a full session for that tomorrow on this with some of the India Stack folks actually in the room. So we'll maybe pause that. We'll take the first question and.
Okay.
But I think.
Allow me one suggestion I make to SIDBI, because this is very important. I pick up from where I left off with this challenge. Mr. Mustafa was really saying it's wonderful. I think we must have a challenge credit. Those who are able to deliver with a margin of 5% or 10%, who delivers with a less margin, they should get a preference for access to capital, whether it is a debt capital or equity capital. That must be the policy for this country, or for the SIDBI at least. That's how they have given. There is one challenge credit. Let it be experimented with. This is very, very important. Next thing is the country is investing a lot of money, including SIDBI, NABARD, and so there are also conduits. The exchequer money is invested in creating social capital. What's really happening? Take for instance self-help groups. We are investing 10,000 rupees through these national rural, or even farmers, producer organizations, about 40 lakhs the government is. So when we organize this as a social capital, we see it as a deemed capital. This concept of deemed capital as a part of the equity, it is not being recognized. If we don't, we had a very unique approach for everything in financial architecture, in thinking of a bank-led model for this whole financial access. So the social capital as a deemed capital has not been recognized, and we have been saying, I will again say it here in this forum, and also will write to SIDBI and also to the, Mr. Rajiv also said in the morning. So the social capital, when there is an investment, it should be a deemed capital, and that should be recognized as a robust equity. If at all, a rating is a must, because we have a different take on rating. Rating doesn't recognize this. This is a problem. So this is what I want to place before, in fact, particularly to SIDBI, and we'll take it forward also.
Sure.
Because these are all things by which we create an ecosystem where this investment is recognized. It's not happening. And rating agencies, they look at very, very cold figures, and they're not able to see beyond. In fact, I had a long chat with the rating agencies before our MFI was rated, but they do not seem to understand, first of all.
No, so I think we should take that conversation
take that
separately.
forward, yes.
Yeah. I think that maybe we'll just give Mr. Babu the
I think, Srini, when we all got our in-principle license, I think the smallest was 300, 400 crores. Probably the largest was 10,000 crores. Exactly, sir, coming back to at this point of time, how the transition happened, I think it has been very, not necessarily it was the biggest ones did the best and the smallest ones did a bad job. I think what each one had to do is that re-question some of the models. For instance, technology, just like waiting for, you want to buy a particular mobile model, all you have to do is just wait for 4 months and you get it a price. I think technology has become like that. When we all got our in principle, people said that it will take 500 crores for us to put the platform, CBS, mobile and all that. Many of us, I think, they ended up doing it less than probably 100 crores for a period of 5 years. And similarly, the branches, the first one, as Manoj said, a typical bank branch is 1,000 square feet, 50 lakhs, 40 lakhs was the first one. Then immediately, suddenly, the thing dawned that you don't have walk-in customers. You are serving at the doorstep. It's either fortunate or otherwise that SFB is converted or again doing doorstep even for HNA customers. So it's both ways it's doorstep. So given that you need a branch for people to be comfortable, but you don't need a 2,000 square feet, you need a 500 square feet. The cost of putting up that branch has come to as low as probably 10 lakhs from what would have been 50 lakhs. So if you look at the cost income ratio of SFB converts today, it is varying, in my view, anywhere between 45% to probably 80%. So my learning out of that is that to be best in class, you don't need to have the highest cost. You'll have to be frugal in terms of wanting to do. And sometimes you don't need to over-invest and invest much ahead than required. So should we have put 400 branches? The choice is yours. So we chose the other extreme of just start with 30, 40 branches. Somebody said, we'll put 400 in one go. I think each one should take what they can chew. But I think after 1.5, 2 years, everybody is reasonably comfortable that we did a transition which is much better than what was anticipated. The challenges listed by all of us as we got our in principle was capital, technology, liabilities. Not the three are the challenge today, and what was not ticked as a challenge called assets became the biggest challenge during all these phases. HR also probably all somehow managed to do it.
So I think with that we'll wrap up. The panelists are here through today and tomorrow, so feel free to talk to them, and I'm sure there are other questions that you'll have for them. Thank you.
Thank you very much, Shri Gomes. A round of applause, ladies and gentlemen, for the esteemed panelists and our moderator, Shri Malcolm Gomes. I'd request you, sir, to now please felicitate our esteemed panelists with small tokens of our appreciation, starting with Shri Devesh Sachdev, CEO and Director, Fusion Microfinance. A round of applause, ladies and gentlemen, for Shri Sachdev. Shri Manoj Nambiar, MD, Arohan Financial Services. Shri Tamal Bandyopadhyay, Consulting Editor, Mint. Shri Brij Mohan, former Executive Director, SIDBI. Shri R. Bhaskar Babu, MD and CEO, Suryoday Small Finance Bank. Shri Abhijit Mehta, President and National Head, ISB and MFIG, Yes Bank. Round of applause for all. And thank you for the applause. I'd also like to call on stage Shri Bhanu Prakash Verma, DGM SIDBI, to kindly felicitate the presence of our moderator, Shri Malcolm Gomes. We thank you so much, sir, for steering that conversation and navigating it so well. A round of applause for Shri Malcolm Gomes, partner McKinsey & Company. And now the photographer definitely needs a photo opportunity from you, gentlemen. So we request you to please give us a group picture. And ladies and gentlemen, from here on, we're going on to the next session, which is, again, I'd say very compelling, and the fact that it is an interaction. So, you know, if it is an interaction, it's supposed to be extremely engaging and something that we don't want to miss at all. And that's why we're not taking a break at this juncture. But I have some very important announcements for you. So at the end of this interaction, we will all have a tea coffee break at Rani Bagh. Right now, we're not breaking for tea coffee. We're not taking a break right now, so please remain seated. Also, I'd like to announce for all of you that at 7 p.m. today, we have a networking dinner organized and hosted by CMD SIDBI. So we would really like to see you all there, again at Rani Bagh at 7. So at the end of this session, we will have tea coffee, and post tea coffee at 7 onwards, we will have dinner for all of you. And again, tomorrow the day starts fairly early. 9:30 a.m. is when we begin with an interaction first, and then that is followed by 2 technical sessions. So again, I will hope to see you all. We also have the valedictory session then afterwards. At this juncture, I would like to give you some facts about clapping, because I know I've been asking you to clap a lot. And not only because we must greet our panelists and our chair, our moderator, but at the same time, I think clapping is very good for health, is something I discovered along the way. Clapping increases immunity and thus keeps diseases at bay. Now, we often live in air-conditioned setups, you know, in houses. We work in offices that are air-conditioned, and we don't really sweat so much. So when we clap, it actually helps with blood circulation. That's a fact. And that's why when I request you to clap, I think you should do it, you know, with all your heart. Thank you. Thank you so much. So now I think we are ready with the days, as you can see, and I'm going to invite our panelists for this interaction next. I'd like to invite the moderator for this session. Ladies and gentlemen, please be seated. We are not taking a break. Please take seats. And again, with a huge round of applause, please help me welcome the moderator for this interaction, Shri S.P. Singh, General Manager, SIDBI. Welcome, sir. I'd like to introduce you to him briefly, ladies and gentlemen. He's had over 22 years of banking experience, wherein he handled wide range of banking services, especially treasury, credit, and many other areas. And we are so delighted that you're moderating the session, sir. I'd like to invite now, of course, our interactors for this session. Ladies and gentlemen, our very esteemed panelists. May I invite Mr. Daniel Rosas. Let's welcome him with a huge round of applause. He's a senior microfinance expert, and he's here to share his views on global MFI experience, a consultant and researcher on a broad range of topics in microfinance and financial inclusion. Gentlemen, on to the left-hand side, request you to please settle in. Mr. Daniel Rosas is currently the senior microfinance expert at the European Microfinance Platform and co-founder of the Mimosa project, which provides a methodological assessment of market saturation and risk of over-indebtedness for leading microfinance markets. And prior to his microfinance career, he worked for the US mortgage investment company Fannie Mae during 2001 to 2008, where he had first-hand experience with the extraordinary boom and bust cycle that took place in the US mortgage market during this period. I'd like to now request and invite on stage Mr. Jason Meikle, Deputy Director of PAC Global Microfinance Fund. Let's welcome him with a big hand, please. Warm welcome, sir. So, PAC Global Microfinance Fund, PGMF, the largest MFI in Myanmar with close to 1 million clients. He has been involved in microfinance management since 1998 and has led operations at PGMF since 2013. Between 2013 to 15, he played a major role in designing and implementing the transfer of the UNDP microfinance project to PACT and the merger of that project with PGMF. Previously, as CEO of Finca, Kyrgyzstan, he developed one of the largest and most successful MFIs in Central Asia, helped develop the country's MFI law, led the transformation of Finca from project to company, and helped structure one of IFC's first major investment in microfinance. A warm welcome to you, sir. Now, they will lead us through their experiences, and of course, I will request Shri S.P. Singh to please navigate the proceedings of the session. So, once again, let's clap and welcome him.
Thanks and good afternoon, friends. When we talk about microfinance, I always see from the economics perspective. Welfare economics says that empowerment is really enlarging the choice horizon. So a lot of discussion which is going on since morning when I hear this, I conclude that microfinance has basically enlarged the choice horizon for the segment for which it has been used. And therefore, it will continue to be used by that segment, and the supply side will ensure that they should continue to enlarge their choice horizon. Now with this perspective, if we see the global growth in the microfinance space, by 2017 end, more than 139 million clients were there, served by MFIs, having more than 114 billion US dollar portfolio. If you see the cross-country experiences, what we find that more than 60% of the portfolio is concentrating to the South Asia. And if we see the basic character and the nature of the portfolio, what we find that while Latin American countries are largely serving the urban clientele, South Asian countries are largely serving the rural clientele. Similarly, if we see gender-wise, what we find that South Asian nations where the microfinance institutions are working, more than 90% clients are women. And if we go to European, East Europe and Central Europe, what we find that more than 50% clients are gents. So this means what? That these microfinance institutions have evolved and grown in various parts of the world, depending upon the need, depending upon the requirement, and the journey is continuing. So because this Congress, what we thought that let's share this international experiences and learn the best practices prevailing anywhere, in any part of the world. With this backdrop, we have invited two microfinance experts, Daniel Rosas from European Microfinance Luxembourg and Mr. Jason from Myanmar. They will be running their presentations. So I would like to moderate this session, not that I'm going to ask the question to them. I'll request them to make the presentations and you pose the question before them. So I invite, Daniel to first, Michael. Okay. So I'll invite Jason to run the presentation and thereafter we'll deliberate upon that. Thank you.
Over there. Okay. Good afternoon, everyone. Thank you for our friends at SIDBI for inviting us here. It's a wonderful opportunity to share our experience, but also to learn very much from you. Myanmar is a much younger sector than India for microfinance, much less developed in the types of institutions and the services provided. So I think it's a good opportunity for us to learn from you, as also to share our experiences, which maybe will bring back some nostalgia for you from the earlier days of Indian microfinance. I don't know how much all of you know about Myanmar, so I wanted to give you a little bit of information about the microfinance sector in general, a little bit about our institution. Majority of the people in Myanmar still live in rural areas, about 70%. And levels of electrification are quite low. In rural areas, less than 40%. Only 25% of adults have bank accounts. And a quarter of the population is below the poverty line. And you can see that about 34% of the adult population are dependent. So they're not economically active. About 50% of the population is made up of micro and small enterprise owners and farmers. And these are, for us, for our institution, this is our target market. The microfinance institution overall is about $650 million and comprises about 3.5 million clients, over 176 institutions. But the breakdown between these institutions is basically into three categories. One is Pact Global Microfinance Fund in the purple color. Then there are another 15, 16 MFIs who make up about 50% of the market, and another 150 MFIs making up the rest. So it's it's a young market. Only microfinance law was passed in 2011. So most of the institutions are quite new. Our institution has been around for over 21 years. Some of the other institutions, a few of them also were operating before the passage of the microfinance law, but many of them are commercial institutions that have come in from other areas, either from other parts of South Asia, Cambodia, Bangladesh, but also many of them are coming in as brand new entrants with private backing. Pact Global Microfinance Fund, as I said, started in 1997 as a UNDP partner. This was the only way that you could do microfinance in Myanmar at the time under the military regime, as there was no legal backing for it. And by 2006, we became the only microfinance partner for UNDP. At the same time, we were able to start working with the Ministry of Health, providing health projects with a microfinance background as we sold them to the ministry, or as we thought of them ourselves, microfinance projects with a health component. And after the law was finalized, we were able to negotiate with UNDP to take full control of the portfolio. We merged it with our existing operations, which were much smaller, and have continued to grow. Our methodology is pretty much standard solidarity group lending. I think it'd be very familiar to many of you. I won't go into the details. We are the first and only MFI in Myanmar that has been certified on the client protection principles. The client protection principles have been encoded by the regulator as a requirement for all MFIs, but so far they have not enacted any kind of disciplinary actions for this. It's more just a support. Every MFI has to support the client protection principles, but we expect that sometime in the future that it will become more of a requirement. The way we look at the needs of our clients is that we have to build their resilience, and we do this in three ways. that work together through credit, through savings, and through quasi-insurance. We're not allowed to do insurance, but we're running a scheme to provide clients with protection in case of death, in case of next of kin death, in case of natural disaster, and in case of childbirth. So we provide both loan write-off and cash payments depending on the situation. As one of the few deposit-taking MFIs in the country, we are allowed to take voluntary deposits from our clients. All MFIs are allowed to take compulsory deposits, but only, I think, about 5 MFIs currently have deposit-taking licenses. Previously, there were more, but the license requirements were strengthened a couple years ago, and there are now very few MFIs taking voluntary deposits. So our delivery channels have been structured over the past 21 years to incorporate global best practices, but also to take into account the Myanmar context. We offer a bunch of different products. I think probably many of you also have similar things: business loans, farming loans, hire purchase loans for equipment, enterprise loans, which are individual loans, not group member loans, health and education loans, and the savings and quasi-insurance products, which I mentioned. We have also been working with with the donor consortium there to provide cash transfer to some of their other project recipients. Because we are in the rural areas, we're visiting those villages on a fortnightly basis. We can provide these services to the donor at a much lower cost than anyone else. So we're actually, on top of our own cash in transit that we have, we're also doing a little bit for one of the donors. Our latest impact assessment, we've done this about every 2 years or so, shows that our clients have good, very high expectations for the future. Repayments have been easy to make. And this may have changed because this was about 2 years ago. There's been some interest in recent time about over-indebtedness. We've found out that it's probably not as severe as people thought it was. But I think if you look into the urban areas where there's a lot more competition, it's more of an issue than in the rural areas. So it's probably still holds true for our clients that they're not having difficulty making repayments. Reliance on money lenders is going down. Women are having higher responsibility of decision-making in the household. I think these are all relatively standard things that many people have seen in the past. Currently, we're in about 23% of villages and townships of the country, mostly serving the central portion of the country. One statistic that I find quite interesting is that of all of the people that we've served since 1997, 62% are still our clients. I think that's an amazing figure considering the over 20 years that we've been operating. The PAR, this is over 1 day at 0.5%. I think it's also a pretty amazing fact in Myanmar. Pretty much everyone has this same kind of portfolio quality, although we've seen a few of more commercial lenders starting to get higher PAR. It's a very interesting credit culture. It's a little bit different from many other countries. Clients seem to be driven more about what they really need than by how much a lender will give them. And there's a very strong sense of responsibility of repaying debt. I imagine that this will change over time. I'm not sure when. Several years ago, I thought that we would already have reached that point, but the quality overall in the portfolio still seems to be very high. Apart from our own operations, we also support 9 local NGOs who have shown an interest in setting up MFIs. With support from one of the donors, we were able to find 9 local NGOs, help them to get their licenses, gave them support in developing their operations, HR, and basically made cookie cutters, clones of our own operations. One thing that we've learned is they're able to undercut us on operational expense. They're a little bit more lean than we are. But other than that, I think pretty much the quality that they're offering is about the same as what we have. And we hope that these turn into the new generation of local MFIs that can actually grow. They're still very small, together only representing 57,000 clients. But in Myanmar, these taken together are kind of a mid-tier, would be a mid-tier MFI. These are the areas of our operations, the purple areas being townships that PACT works in, and the black areas being the areas that our partner MFIs work in. The periphery of Myanmar is a hilly area, and many of the periphery areas are also still have lingering ethnic violence. So most of the operations, most of the population is centered in the middle of the country. One of the biggest challenges that we see for the future of Myanmar is how to extend operations out into the peripheries, where population densities are much lower, infrastructure is much lower. And our plans are to grow significantly over the next 5 years with new investment, more opportunities for borrowing. We hope to reach 2 million clients in the next 5 years and have a significant growth in our portfolio. We'll have to see how things go, but these are our plans. If we can find the access, if we can find the financing, if we can continue to grow our human resources and grow our institution, I think we can make this. Okay. Thank you.
Daniel to make his presentation, and thereafter we will start this question and answer.
All right. Well, I'm the one who stands before you and the end of the day, which is an easy place to be. So I'll try to keep it interesting and not too long. I was asked to talk about sort of the global experience of microfinance. That's a pretty broad topic. And what I thought is maybe easier to tell it through stories. So I came up with 4 stories. Or I call them tales, the SIDBI Congress tales. And let's go. Oh, no, not those tales, sorry. So I'll start with Peru, which I call the tale of the fat groundhog. Kyrgyzstan, the tale of the cautious owl. Jordan, the tale of the grumpy cat. And Cambodia, the tale of the Russian hare. I think the average age of the audience probably should go down by, 50 years or so. So we'll be in kindergarten and this will be much better. But maybe it's because I have small kids. Anyway, it should be more fun. But before I go into the tales, a little bit about what markets have in common. So the work I do on the Mimosa project specifically and some of the other research that I do tends to look at markets as a whole. It doesn't so much look at the individual institutions, but how do markets operate, how do markets grow, what are the types of challenges that markets face. I started this almost 10 years ago. In fact, one of the very first things I did was a study of Andhra Pradesh before the crisis, suggesting that, it was already quite a saturated market. And one thing that we've noticed in the Mimosa project and the data that we collected is that these markets have one thing that's a very strong tendency that's in common. And it's really this chart here, these bubbles. So what this is if you graph the penetration rate, which is just how many borrowers per adult, per 100 adults there are. So for example, if 13% of the adult population are borrowers, that you would be at the 13 on the x-axis. And on the y-axis, it's the average loans per borrower, so which is a basic metric of multiple borrowing. And so what you see is this very, very strong relationship that as markets have higher penetration, as they grow, the number of multiple loans grows alongside. In theory, it seems like it should be possible to be there, which is to say you have high outreach, but relatively modest multiple borrowing. In practice, it does not come up. Right? You just don't see it in the data. This data is from multiple countries, so I'll go through a couple. You have Morocco here on the very bottom, really low penetration market, relatively low multiple borrowing. You have Peru and Bolivia in Latin America, really much higher multiple borrowing rates, also much higher penetration. These, by the way, the dots are at the regional level for the country, so at the provincial level. Here, for example, is Cambodia in 2015. Here's Cambodia a year later. You can see that I'll talk about that later. It's something interesting. And this here's India, not all of India. The large dots are all the states. The small ones are the districts of Maharashtra, Tamil Nadu, and Uttar Pradesh. This is a study we did earlier this year. What you see at the end of the day is India is kind of in the middle of this pack. So you have high multiple borrowing levels in Latin America, and Peru especially. Some of the other markets we've seen would probably be in that range, would be Nicaragua and Mexico. But the data there is not quite as strong. So this is really solid data from the credit bureaus. And then you see Cambodia and Kyrgyzstan, which I'll talk about later, below the line. And India is kind of in the middle. Also, what's interesting is India goes pretty far out. So if you look, well, you can barely see it, but if you look here, right, this is the highest penetration we have in our data set of anything, and that's mostly Tamil Nadu. But I won't talk about India. I'm going to talk about the tail of the fat woodchuck, which is in Peru. So Peru is a market that's one of the oldest microfinance markets in the world. Goes back to the very, very late 70s and early 80s. It's also the very first market that started to commercialize. So the very first commercial institution, microfinance, was in Peru. And as a mature market, this is data from not very most current data, but it hasn't changed that much. It's not really growing very fast anymore. So every year it's growing in single digits, 6, 7%, 8%. Along with that comes an interesting little pattern, which is you have really high delinquency and write-off rates. So delinquency being the yellow bars, the write-off being the green. And in Peru, what's interesting is one of the things that we do as part of the study is we do a field survey, and we ask people, what happens if you take a loan, if you borrow a loan from a bank or MFI or a financial institution, and you don't pay it back. And usually we ask about the collection process, but we also ask about, can they then go to another institution and borrow again, take a second loan? And usually what people say is, oh, no, we can't, because the second institution will find out from the computer that I already have a loan, or they'll find out from the internet that I already have a loan with somebody else. In Peru, everybody, not everybody, but a substantial number of people said, not only do I have will they go on the computer and find out that I have a loan with somebody else, they actually said, oh yeah, they're going to get it from InfoCred, which is the name of the credit bureau. So the level of awareness among borrowers is so high that they actually know the name of the credit bureau itself, and they know the consequences of what it means to default. So when people are defaulting in Peru, this is as strong a sign of over-indebtedness as you can get, right? They're not defaulting because they don't know, because they think it's okay. No, they really are defaulting because they have no other choice. So what this comes to show is you have a fairly stable, this is a 10-year, 2004 to 2015, this chart. You know, a stable pattern where default rates are high, delinquencies are high, write-offs are high, and yet the market continues. And as of 2 years ago, in the credit bureau, 8.4% of all adults, not just borrowers, but all adults in Peru had a write-off record in the credit bureau. Right? So that's a pretty high exclusion rate because they can't go back and borrow again. And then we did another sort of deeper look, and we looked at the regional level in Peru. And the regions with the highest level of penetration were also the ones that had the highest level of write-offs in the credit bureau. So to me, it sort of suggests the market that's kind of reached that level of saturation. You cannot grow more. You cannot grow more beyond the growth of the economy itself without over-indebting a significant number of people. And that's essentially what they're struggling with. But the controls and the structure in the market are such that those write-offs and those defaults allow the market to kind of let out the steam. So there's no real risk of a crisis or a repayment bubble. And that's kind of the reason I call it the fat hedgehog or fat woodchuck. It's fat and slow, but you avoid disaster anyway. But that doesn't mean the clients don't suffer. All right, so another story. This is the tale of from Kyrgyzstan, the tale of the cautious owl, maybe the exact opposite of Peru. Kyrgyzstan is quite a younger market. Actually, Jason was telling me earlier that he knows Kyrgyzstan from the 90s, that he's started work at one of the MFIs there at Finca in 98, all right? I don't know Kyrgyzstan that far back. But again, we've done some studies there, and there are two interesting things that I want to talk about in Kyrgyzstan. So one is, you can barely see, oh, right. One is multiple borrowing. There's an interesting thing that happened. So this was Kyrgyzstan in 2011. So you see fairly high levels of multiple borrowing and modest penetration. This is Kyrgyzstan 3 years later, 2014. All right? Something really interesting happened. Penetration increased a little bit, but multiple borrowing went way down. So average number of loans per client went from about 1.5, 1.5 to about 1.2. And that really interesting thing is the first number comes from a study that was done, an over-indebtedness study that was done by, oh, I forget who, but not important. And one of the recommendations of that study was that the government consider regulations to reduce multiple borrowing. And so what the government did, what their central bank did, is they implemented regulations that said, if you are a financial institution, an MFI in this case, and you give a loan to a client who already has a loan with somebody else, you must take additional loss provisions against the loan that you're giving. There's a pretty strong incentive to reduce multiple lending. It didn't go away. There's still multiple lending there, but it's at a much lower level. So I found that quite interesting. The second example is dealing with foreign currency. This chart, I apologize, it's a little more complicated, more going on there. But there are two things here. So Kyrgyzstan is one of the Central Asian economies that is exposed to a lot of foreign exchange flows. You have a lot of remittances, people working abroad. And a lot of Central Asian economies have financial institutions that lend in foreign currency, usually dollars or euros. In Kyrgyzstan, you can see in 2016, there's a sudden jump in that red line, which is default rate, delinquency rate on foreign currency loans. And what happened was there's a huge devaluation there of about 30% in their currency. And yet, the loans denominated in local currency, the delinquency rate barely budged. It just didn't move. That's the green line below. But there are two other things that are happening that put this in perspective. The green bars is the portfolio in local currency. The red bars at the top is the portfolio in foreign currency. There was very, very little foreign currency lending in Kyrgyzstan because for years, going back to Jason's time even, that was not allowed. for MFIs to lend in foreign currency, and as a result, the number of defaults is quite limited, and institutions were really insulated from that macroeconomic shock. If you look at some neighboring countries, in Azerbaijan, the market after their devaluation at the same time was effectively wiped out. There are major MFIs there that are literally struggling for survival, and some that literally will not survive. So the takeaway from the owl story is that the owl is careful and avoids dangerous trouble spots. Sometimes it's good to be the owl. All right, Jordan, the tale of the grumpy cat. So an interesting thing about Jordan, it's a country with a very large number of non-citizen residents. So 30% of Jordanians are from abroad. They're either some combination of immigrants, migrant workers, or refugees, especially nowadays with the war in Syria. There are quite a lot of Syrian refugees who have moved to Jordan. That has interesting implications for financial inclusion. So this is a chart of borrowing among Jordanian citizens. The green bar is borrowing from formal channels, so MFIs, banks, and the pink, or the orange, is from informal, so money lenders and so on. Here's the same chart for non-citizens. Now, there's something interesting. The formal borrowing is barely there. There's almost nothing there. Informal is huge. It's almost double the level of citizens. So there's huge demand for loans among the non-citizens, among this 30% of the population. That's a lot of people. And it's almost entirely unmet. So, wait a second, what's that? Oh, ladies and gentlemen, I'm sorry, that's the black swan. I heard he's coming a number of times. He's been mentioned a lot. Yeah. I was thinking about the black swan. Actually, I was thinking that if he shows up that often, probably it's not a black swan. It's probably just the cost of doing business in India. Anyway, we'll let him go. Go back to the tale in Jordan. So this is our map in Jordan. It's a map of saturation. Think of it as map of penetration, essentially. The green areas are low penetration. The color, yellow, orange, you don't see red here, would be the high level. So this is the map of Jordan as it is for total population. This is the same map on the right for citizens. So what's happening in Jordan is you have a market among citizens. It's actually getting quite saturated in parts. But it's a result of not serving this 1/3 of the population. So it's an interesting thing to think about. I would imagine that some of this might also be relevant in India as well, in different parts of the country. So the grumpy cat doesn't like guests, but when he doesn't share, he will overeat. That's the problem. Not good to be a grumpy cat. All right, last one. Cambodia, the tale of the running hare. The running hare is running from something, and he can't stop. And in the case of Cambodia, the running is the growth. The market in Cambodia has been growing nonstop for well over 10 years now, with very, very minor dips that are barely noticeable, actually. And the one thing I had shown you before in the chart is this interesting thing that we notice in penetration. So this is the penetration rate in 2015 relative to multiple borrowing. A year later, you see all of the provinces in Cambodia shift to the right, but multiple borrowing does not go up. For us, that's very strange. We looked at that, something's going on. So there's a lot of growth happening, but it's not having the same kind of effects. And so what we started looking at, okay, why is there no multiple borrowing? So we started looking at how the growth is happening. So yes, there are more clients, but the loans are also getting bigger. This is, you can see the portfolio growth, which is the bars, and you can see the number of the client growth, which is a line. And you see by 2015, the growth in clients has actually stopped and started to go down even. And that trend has continued. The number of clients has not grown since then. But portfolio growth has not stopped, not slowed down. It's been about 30 to 40% every single year. And it's because loan sizes have grown. So this is loan sizes where 10 years ago, the average loan was about $400. Now the average loan is about $2,500. It's actually close to $3,000 now. That's a level of growth I have not seen in any market in terms of loan sizes. And that's not surprising. This is a study I did of a bunch of markets in the mixed market. And Cambodia comes up at the very, very top in terms of level of growth in loan sizes. Even after adjusting for economic growth, even then, Cambodia is by far higher than anybody else. So that creates a real sort of issue for how does Cambodia address, the risks that are embedded in that type of growth. I don't want to go into all of the details, and we can deal with them in questions, but what the sector has done is they've started a self-regulatory process of sort of developing this infrastructure that relies on three things. A very clear set of metrics to monitor the risks that are behind this loan size growth, to have independent parties that actually do the monitoring, not the MFIs themselves, and then there are some sanctions in place for those that violate the norms that they've agreed to. The monitoring looks like this. This is actually a dashboard that's developed by the credit bureau. So every single MFI in the country gets a dashboard like that. And they can look at the various indicators that are relevant to the risks that are happening in that market. And the rating agencies, the SMART campaign, have adopted that dashboard as one of the elements that they look at when they look at client protection assessments. The sanctions come from investors, so almost all investors know about that dashboard. So I don't know if I can go back here. Yeah, so that dashboard, there are a lot of investors who know that MFIs get this dashboard every month, and they ask for it. And they said part of their monitoring, they ask for the copy of that dashboard, and they look at it to compare their portfolio against, most investors have multiple investments in Cambodia, so they can compare different MFIs. They also do it as part of their due diligence itself. And then on top of that, you have the SMART campaign that actually adopted the compliance with the thresholds that have been defined as part of the self-regulatory system in order to remain SMART certified. So as MFIs, now there are 8 MFIs in Cambodia that are SMART certified. This year they're all undergoing recertification. It's been this 2-year time period. And if they do not comply, they're at risk of actually losing their certification. So there are potentially real sanctions. What the central bank will do about this, we don't know yet. That's to be seen. So anyway, the takeaway from the running here is he can't run forever, but can he slow down safely? We don't know. So that's the tales. Thank you very much.
So thanks, Daniel and Jason. So let me pose the first question and thereafter to the audience. In fact, this global data I was going through and I was observing that global data is reporting that in past 1 year, basically, there has been a decline in the client growth in the microfinance sector. And some literature even say that this 2016 demonetization in India, because the client growth in India has also slowed down. And this has a very sizable impact on the global growth of clientele. So how has been your experience in the geographies where you are working? And what are the reasons which you see that there has not been a substantial growth in the client base in past 1 year?
I think, from the Myanmar context, because the sector is so new, so young, we've actually seen significant growth, especially in most of the new MFIs came in around 2013, and they took a few years to sort of get up to speed, make their operations sustainable. And what happened in fall of 2016, the major donor consortium put out about $100 million in hedged loans. They were covering the hedge costs on that, so their cost was significantly less. But they made available, I think actually 80. They put out 180 was taken up. And what we saw is that the younger MFIs took advantage of that money and grew significantly in the past 2 years. So Myanmar has continued since around 2013. Growth was slow, steady, but in the past couple of years, it's really increased a lot. How long this funding can hold out, because that funding was been used up. I think they're planning to put out another round. There's a little bit of money that's available in the local market, but it's expensive. The loans themselves are not expensive, but the lenders, the banks are requiring 40% cash collateral, which brings the cost up to, it depends on how you want to look at the opportunity cost of the cash collateral, but somewhere between 17 and 22% probably, with an interest rate cap at 30%. So most of the MFIs are not, and the operating expense ratios are about double what they are here. So we're looking at about 12 to 15% operating expense ratio. So it's a very difficult market unless you have access to somehow subsidized funding. So I don't expect to see the same kind of growth to continue. Interestingly, though, in Myanmar, average loan size is not growing so much. It's a different dynamic from Cambodia. Because all the MFIs are relatively new, they're going for geographic expansion, keeping the small ticket size to increase their geographic outreach. So the average outstanding balance is about $200 per client in Myanmar. So it's a different dynamic from Cambodia.
Then I think so Myanmar is, I think, an outlier. There are not too many Myanmars out there where you see growth continuing that fast. There's quite a lot of growth in sub-Saharan Africa in some countries, but not all of it is coming from MFI. So you see a lot more fintechs coming in, a lot of non-traditional lenders. But in a lot of markets, you see the sort of tailing off of maturity. The example of Peru is you see similar numbers throughout Latin America. That's not a fast-growing market at all. You do very much see this pattern of number of clients holding steady. It's not common for it to go down, but to hold steady or grow very slowly, and portfolio sizes continue to grow mainly because of loan size growth, which is frankly pretty normal. If you think of economies growing, people's incomes grow, so you would expect loan sizes to grow over time. I would add one more point, which I think is maybe the most relevant, is the really mixed market, which has been the sort of source of global data for a long time, has gone through some internal changes so that the data that you see now is covers fewer institutions than it used to. So it looks like there's been a shrinking, but actually mostly just a reflection of fewer institutions that are reporting to mix. And I think your point that India was a big contributor of this is surely right. I think India accounts for something like 20% or so of global microfinance clientele. Yeah.
Thank you. So now over to the audience. You may. Mike.
I'm particularly interested, we were just asking about what are the, chiefly Myanmar and India, what are the interest rates? I'll tell you why, because I was invited by Myanmar by UNDP in the late 90s, and we already had a French institution and a Bangladesh institution lending money, and the biggest problem was they calculated inflation and this and that, and the exchange rate, it was 30 chats at the airport and 300 outside the airport. So they were charging 60% interest. So we went into Myanmar, we didn't, Myrada, this is a government NGO, and we opened in Michina, we opened a whole series of SAGs. We had no problem because we didn't lend money, they had savings, and the UNDP gave them some grants, and they set their own interest rates. But the biggest problem was interest rates in Myanmar, because there's such a fluctuation. In fact, I had recommended to the government of India that one of our Indian agencies, NABARD or SIDBI, go there. But nothing sort of was followed up because there was no infrastructure at all. of, you know, financial institutions and all. So I just was wondering, what was the interest rates? How do you cope with this situation? And similarly in Cambodia, but that can come later. Just could you tell us how you coped with it? Because that's the challenge that, you know, you had to face.
Yeah, I think you're referring probably in the mid-90s, GRET. Yeah. GRET was operating, and PACT, our parent corporation, started operating in 1997. And they were two of the beginners there. At the time, yes, people were charging 60%, and I think it was flat, not declining balance 60%, but flat 60%. At that time, the money lenders were charging anywhere between 10 and 20% per month. So even 60% was a good deal. The interest rate cap, which came into place with the law in 2011, is 30% declining. At that point, PACT was charging 36% declining. So we were able to go to 30%. And for us, it was not so much of an issue. Of course, we had years and years of grant funding that built up our equity base. We had very large client deposits. So for us, it hasn't been so much of an issue, but for the younger MFIs, it's a big problem, and it's a big problem for the sector because these MFIs coming in, say from 2013 onwards, they want to get back their investment as soon as possible. So they're all looking at the urban areas where they can make the larger loans. They don't have to spend as much money on logistics. So they've all concentrated in Yangon, a little bit in Mandalay, and they're all fighting each other. Some townships, some of the urban townships in Yangon have 27, 30 MFIs operating in the same township. So the problem is that there's no incentive for them to go into the rural areas as far as they see it. Some of them are now starting to understand that the urban areas are oversaturated and they need to move out into the rural areas. But there's very little incentive for it. The interest rate cap is probably the main reason for that. But there's talk, the regulator had talked about allowing, currently there's nothing in the regulations about extra fees. So most of these MFIs, we don't charge any extra fees. Most of the MFIs are charging 1-2% disbursement fees, something like that. There was talk from the regulator about allowing higher fees in the rural areas and reducing the amount of fees that people could take in the urban areas. But so far that hasn't happened. So I think it'd be nice from the client side if we can see the interest rates come down. But I think it has to happen realistically. It has to happen with an understanding of the cost of doing business, the cost of capital. If the government really wants to bring interest rates down for the people, they need to look at the supply side and provide incentives to the banking sector to lend to MFIs.
Maybe I can also to add. So interest rates is a really fraught subject because, you know, you see market after market, as markets mature, interest rates go down. That happens everywhere. You know what's also happening is loan sizes are growing at the same time. And that inverse relationship between loan sizes and interest rates is extremely strong. You know, as much as we might convince ourselves that we're getting more efficient, when we're better, what's actually happening is we are taking the same, more or less similar processes and applying them to larger loans. And of course, interest rates can be lower in that case because our margins are growing. You know, I am particularly sort of, take one example. So Mexico, market that has historically had very high interest rates and to this day continues having high interest rates in the range of 90 to 100% annually, APR, so declining. what's also not changed in Mexico is loan sizes have roughly stayed the same. They've gone from about $400 to about $600 now, but that's a very minor shift over a period of 10 years. And so I would be very conscious every time you look at the market and you look at an institution and say, okay, interest rates are going down, great. What's happening in the portfolio? One last point on this. So in Cambodia, in April of last year, the central bank promulgated an interest rate cap at 18%. And on top of that, they allowed fees. What happened was that there were MFIs that were more rural, whose yield at the time, whose sort of effective interest rate at the time, with fees included, was in the upper 20s, 28, 29, 30%. And the urban MFIs were in the lower 20s, 20, 21, 22. And so the urban MFIs could adapt. It wasn't a big deal. Once they included the fees, they didn't really have to change much at all. The rural MFIs, you actually saw one large MFI, I don't want to name it, that actually wound up cutting about 100,000 of its clients, and they were the smallest clients. So this can have real unintended effects if you really implement it that way. So I would just be cautious about it.
Thank you.
Yeah, so in Cambodia, there is that 18% cap. They've done another thing that they sort of then realized that, wait, MFIs are different, and they allowed the fee structure. So the cap remains 18% for the interest rate, but the fee structure is a dual fee. So if the loan is above a certain size, the fees can be at a certain level. If the loan is below a certain size, the fees can actually be higher as a percentage, in percentage terms. Sorry? Well, that's what I mean. When I say fees, that's what I mean.
Okay.
It's,
fees in the form of fees.
yeah, it's the various lending commissions and, yeah, that kind of thing.
So, with Myanmar, you stated that you have 9 lakh something clients and 4,000 something employees. How you manage the operational thing?
Yeah, 4,000 employees. To me, it seems like a large number. We have a very, very sort of structured, for Myanmar, everyone's used to very sort of military structure. So we have this very military structure of cascading management levels. It works. Probably, and I shouldn't be saying this, but probably you don't want to take too close a look at what's happening on the ground level. I'm sure everything is not done 100% as you would want it to be done, but things happen, things work. You know, we have audit after audit. We go through two audits a year. The regulators coming in. We have our own internal teams looking at on a very frequent basis, internal control teams. You just have to manage it. I think to a certain extent, people are used to working in that way. They're used to the structure, the way the government has always been there, the way the cooperative societies have always been there. The structure has been there. So the discipline is there. But yes, it's a lot.
Operational cost.
Our OPEX is about around 12 to 14% usually. 14%. Which of the large MFIs, who mostly are foreign MFIs, it's the lowest. There are local MFIs, but most of them are very small, that may have a lower cost, but I don't think anybody is below 10% in Myanmar.
There's a question for both of you, actually, especially Daniel. We saw a black swan come in. So has black swan been making appearance in different geographies? How frequently?
Well, there's a black swan and there's a gray swan. The gray swan shows up every few years. The black swan is meant to be rare. I mean, I see it two ways. So I think what you're thinking about is, you know, an event that you can't really foresee.
No, what I mean more is, kind of a social backlash, political backlash, which comes from the high interest regime which this operates in. Yeah. It's always a sensitive issue when you're dealing with lending to the poor.
Yeah.
So the shocks we've seen here have often been because of that. Yeah. Not always, but mostly.
That's actually quite rare. Purely that sort of civil unrest or the political sort of backlash. So you saw it show up in several countries in 2008, 2009. So in Nicaragua, there was a big movement called No Pago, I won't pay, literally in Spanish. There was a smaller movement in Morocco, but it was fairly localized. There was a crisis, and along with that came sort of this political movement, but it was modest. I'm actually not aware of too many such events. So another crisis that had that element in it was Bolivia in '99, where there was actually a political backlash. But it's more of South Asian, more common here. There was one in Pakistan against, there was this movement against Kashf. Also sort of local politicians suggesting that borrow shouldn't pay. But it's rare, actually. That's rare. In my experience one of the things I do is I study microfinance crises. And if I look at crisis after crisis, I mean, you look at Bosnia, there was no political movement at all. You look at, for example, there was a crisis few people know about in Nicaragua. In Nigeria, around the capital city, Lagos, there was really no political backlash. I mean, it was just a crisis, MFIs went bust, and that was it. There was an element of, because those MFIs were deposit-taking, there were sort of people unhappy, as they would be. And you saw the same thing in Uganda when some SACCOs were failing there. But that's a different element. It's not quite the same thing as borrowers saying, I won't pay. That's I think, something else. So I think this type of situation it happens outside of India, yes, but it's rare.
And the running here in your last slide, we see that a lot here. We've seen growths, galloping to 60% per annum, 68%, now 48% last year. Is that also prevalent commonly?
Well, in young markets like Myanmar.
Yeah, I would say it depends on the market.
Yeah.
If you have an underserved market, then I think it's normal to have that kind of growth.
Exactly.
But in a market like Cambodia, which is very saturated, to me it's a little bit scary.
I would say when you're getting 30, 40% growth and no growth in clients, that's a signal something's wrong. And mind you, that's no growth in loans, it's no growth in clients. So you could actually see growth in loans, but just clients getting multiple loans, and it's the same thing. Yeah, India, the study that we did, the Mimosa study in some of the states, it really seems a very regional picture. That which is true in Tamil Nadu is completely different in Uttar Pradesh. I mean, the issues are entirely different. The level of penetration is very different. So it's hard to sort of have a single answer to the whole country. I think you have to look at where it is. And also, I think you have to look at the market segment even. Yeah.
So, sorry, I'm taking too many questions. I don't know whether there are any more. Okay, I'll just shoot it anyway, which is that you've been studying the markets. So, and you made a comment or gave an insight about, is the efficiency real, or is it just the loan sizes going up and there's no efficiency coming up? So have you studied India too? Is that the case with India too?
I didn't look at India specifically. So a couple of years ago, I was asked by the SMART campaign to develop an improved model for measuring what they call appropriate pricing. So one of the elements of the client protection principles. And so one of the things I did was multi-country panel data of 8 years. And once you factor out loan size growth, there was no, basically there was no impact on interest rates through either competition or market maturity or other factors. It was just all about loan sizes. Now, I don't know this market well enough to, my recollection is it used to be fairly common to see loans of what, 5,000, 6,000 rupees. I don't know how many loans are still being made at that level these days, right? So now you see a lot of 20,000 loans, you see 30,000 rupee loans, right? That's growth. Now, it's not growth that's higher than other countries. It's not like at the level of Cambodia, because it's over a long span, and yeah, I think the average isn't 20,000. I think the average must be 15 or something like that, right? So over 10 years, to go from 5,000 to 15 is fairly modest. But I would be, especially with the recent shift to SFBs, I would be much more conscious of this issue now than before. So you see this change where one of the things that came out is SFBs and banks are starting to not converge so much, but within the lower segment of the banks, the SFBs are starting to compete with that segment much more. So the 20 to 50,000 rupee loans. And as they grow in that range, and if the NBFIs also feel like they need to compete, you could see loan size growth happen pretty quickly. So this is something that I would be watching sort of in the next few years.
So now one last question. Okay. And after that, we'll close this session, I think.
Yeah. In the Indian context, there was a lot of demand by the MFIs to have the savings opened up to them. We've seen that Myanmar is doing it. I'm not very sure in terms of the experience there, whether there was, I think the primary concern from the central bank is that the depositors' interests may not be protected if they open it up to the non-banking community. So just wanted to understand from a global perspective, how do you see the experience of other countries where they have opened up the liability to the MFIs, this thing? Was there any instance of any institution going down and the depositors going?
So, I mean, there are basically two ways MFIs have gotten into savings. You see institutions that have, from the very start, started as deposit-taking institutions. So these are either cooperatives, or they were rural banks, or some structure that, from their roots, they started taking savings. You see savings very, very common throughout Africa. That's a lot of institutions. There are actually not that many credit-only MFIs in Africa. But for example, in Latin America, it was much more so the case that the MFI started as credit-only, more similar to here, and then acquired deposit licenses, eventually became full-fledged banks. Many of them have actually merged with banks or have been acquired by banks. And so there are basically two ways that institutions seem to have gone about this. So there's kind of the model of an institution that says, okay, I'm going to get a banking license. I'm going to start collecting deposits, but my primary focus is I'm going to see it as a way to raise low-cost funding. And if I do that, then the most efficient way for me to do this is to target middle-income clients. Not my clients, but a whole new client segment, and do large deposits that are usually time deposits, easier to manage than current accounts. And these, you will very often see, if you look deeply into the structure of the deposits of a typical MFI in Peru, for example, what you'll see is 1 or 2% of all deposit accounts account for easily 97, 98% of total funds. So these are these $100,000 accounts, these are even $500,000 accounts, and a whole bunch of accounts between 10 and 50,000. And then you see this very, very long tail of really, really small accounts. And that tail actually can be really confusing, because you think, oh, so I have a lot of accounts of $15 or $20. And actually that's not what's happening at all. What's happening is you actually have quite a few accounts in the sort of $100, $200 range, and you then have a whole lot of accounts that are zero. And then you're just averaging them out, and hence you see this number. And that's the most common thing, because what's happening is there's the profile of the client that uses your deposit account entirely to do cash in, cash out. Your disbursements go in there, the repayments go through there, and that's it. Or maybe they get some remittance or something. It'll go through there, they'll cash out. They don't leave anything there. That's extremely common. In one of the papers that I wrote, about 75% of deposit accounts of 4 countries, so we looked at Bolivia, we looked at Nicaragua, Pakistan, and actually a group of countries in sub-Saharan Africa. And very different models, including cooperatives, including banks and MFIs, and about 75% of the accounts were empty. So it's really, you see this as a very common problem. I know this is a problem here too, so this is not new to you, but this is not, you're not dealing with anything that doesn't exist elsewhere. This is a very common thing. So I would always take the sort of, if you want to do your savings sort of in a strategic way, have a sense of, what am I trying to do? Am I trying to create a cash in, cash out channel? Great, nothing wrong with it, it's very useful. Or am I trying to, encourage clients to actually save? And if it's a second, you have to do other things. You cannot just open the accounts and hope that it works.
Yeah, in Myanmar, we are, as an MFI, as a deposit-taking MFI, we're only allowed to take deposits from our clients. Regulations used to say borrowers. And so sometimes the local level regulators would ask you, when a client repays their loan, you have to return their savings to them, which is crazy because maybe it's a week or 2 weeks in between loan cycles. Then finally they said, your clients, okay? But there's no definition of what a client is. Is it someone who comes and pays a registration fee of $2 to become your client? And then they can make a $10 million deposit with you? I don't know. We only take deposits from our people who generally have a loan with us. But there's about between 50 and 70,000 people in any given month that have deposits with us that don't have loan accounts, current loan accounts. And some of those are new people, new clients that we ask them to start savings before they get a loan, make these little savings. So some of that is that. Some of it is people who have paid back a loan and they said, I'm fine for now. And maybe they don't ever want to get a loan again, or maybe they want to get a loan after a month. We have both people like that.
So with this, now we are closing this session. And
thank you very much, gentlemen. With that, let's extend a hand. Thank you so much. I think lots of useful takeaways there. And now I would request Shri S.P. Singh, the moderator for this session, to please felicitate the esteemed panelists. Mr. Daniel Roses, let's hear it for him, ladies and gentlemen. Thank you so much, sir. And Mr. Jason Meikle, a big round of applause for him. Thank you so much once again. The photographer needs a photo opportunity of the three of you. And ladies and gentlemen, tea, coffee break, not the break, but the day comes to an end. So there's tea, coffee organized for all of you at Rani Bagh, where we had lunch. But I also have to announce this again, in case you missed this one. We have a very special networking dinner today, organized and hosted by CMD SIDBI, which is also at Rani Bagh. So I'd request you all to please stay with us till then. It starts 7 p.m. onwards, dinner. And tomorrow, the time to assemble here itself in this ballroom to take the proceedings on time is 9:15 a.m. I would request you to please be here at 9:15 a.m. Thank you very much for being a very special part of this day 1 of the SIDBI National Microfinance Congress 2018. This is Aishwarya Singh, and I will see you tomorrow. Thank you very much.